Hi guys, so welcome back after a long gap for you and me. Okay, no problem. Today we are going to discuss about the partnership, the most important A category topic. So we can get 16 marks from this partnership, at least 16, maximum 23 marks. Yeah, Ganesh. Okay, thank you. No problem. I will come from today onwards the live continuously. So today we are going to discuss the partnership. Tomorrow I will discuss about the hire purchase. On Sunday we will discuss about the MCQs. So no problem. Without the basic knowledge also you can hear my class because I will teach from the basics from the partnership. Okay. Without any late, I'm going to start the chapter of partnership. So how many marks we can get from this chapter, sir? Totally 23 marks. 14 marks compulsory question, 5 marks compulsory question. In the 8th question they will give, and 4 marks related to the MCQs. So I will give promise to you, by end of this section you can get these 9 marks conformly. From these 14 marks we may get minimum 9 marks. Okay na? So if the balance sheet tally means totally we will get the 14 marks. Without the balance sheet tally also you will get a minimum of 10 marks from the 14 marks. So that means the maximum in total 19 marks we are going to get this topic. Most of the people they will use this topic, but for those people who are taking the choice of the partnership, you must and should you need to get minimum 9 marks. So you can listen my class from the basics onwards I will teach. Okay guys, thank you for your coming. So first I am going to start with the definition of the partnership, even though you know, once again, that's all. As you know, what is the Partnership Act 1932? So as per the Partnership Act, the definition is partnership is a relation between the persons who have agreed to share the profits of the business carried on by all or any of them acting for all. The total definition I have divided into the 4 parts. So first one is called as number of partners. They may get the MCQs ma. So normally in a partnership form, minimum 2 partners must be there, maximum 50. More than 50 means it is called as a illegal partnership. So maximum how much amma? 50. There is another concept called as limited liability partnership. What is the meaning of limited liability partnership ma? Limited liability means the partners share only. Partners share to the capital only, he will have a liability. Normally the partnership form will have the unlimited liability. What is the meaning of unlimited liability ma? Partners are personally liable until the estates of the partners. So when we see the limited liability partnership, the minimum how many members should be there? Minimum 2 partners, maximum is unlimited. Only for the partnership form, the maximum of 50. And next, what is the meaning of partnership agreement ma? Partnership agreement means nothing but we can call it as partnership deed. There must be a deed. Rules and regulations specified by the business will be written there itself. Whatever they have written, that will be acceptable as per the court of law. But it should be legal, it should not be a illegal activities. Next one, profit sharing ratio. There must be a profit sharing ratio, not only for the profits but also for the losses. Okay now, the partnership deed must be specified how the distribution of profits or losses among the partners. And next one, a very important one is called as management of the partnership firm. So any or all of the partners of the manage the firm acting on behalf of each person. For example, I and Naveen sir are the partners. So whatever the things which I have done will be liable on Naveen sir also. Whatever the things done by a Naveen sir will be liable on me also. So that is called as acting for all, or anyone are acting for all. So these are the basic conditions when we discuss before the partnership, no problem. So next come a very important point. The rules are applicable in the case of absence of partnership deed. Nothing but these features are called as a salient features. In the case of partnership deed is silent, the profit sharing ratio is equal, and the interest on capital not allowed, interest on drawings is also not allowed, and salary and commission is also not allowed, but there is a interest on partners loan, how much of a maximum of 6%. So once again, profit sharing ratio is equal. They are not going to allow the interest on capital, interest on drawings, but they are not going to allow the salary and commission also, but they will allow what interest on partnership loan at the rate of 6%. So this point is very, very important. So don't forget this 6% per annum. So only on partner, not on the partner's capital, will be allowed on partner's loan. If the partner given loan to the partnership firm, on that they will give how much percentage of interest 6% in the case of silent. But in your partnership deed, 10% you have declared means you can allow the 10% also, no problem. And there is an MCQ for you. In the absence of any provisions in the partnership agreement, the profit or losses will be shared on which basis on equal proportion, on a ratio of capital sum, on a equal proportion. You may get like this MCQs in the examination also. And next one, in a written agreement among the partners, the interest is how much 5% per annum is to be provided on loan. The interest given by the partner to the firm will be at the rate of interest whatever the percentage mentioned in the partnership deed means how much 5%. In that situation 5% only. If nothing is mentioned in the partnership deed, at that point of time how much interest they are going to allow at that point of time they will allow the 6%. But in this situation they have mentioned how much 5% as a interest on loan. For that reason, how much we are going to allow? Only 5%. This is also an important MCQ. You must and should remember. And next one, there is an important MCQ coming to the picture. This is a simple only, but while seeing in the examinations, the student may feel tough. The total assets of the firm is how much? 1,20,000, and outside liabilities amounts to how much? 60,000 rupees, and the total capital contribution by the partners would be dash. Sir, simple I think you know the balance sheet. Can you say the balance sheet pro forma? Imagine this is a balance sheet. In the left hand side we are going to have what we are going to have the liabilities. Liabilities are divided into mainly two types internal liabilities and external liabilities. And the internal liability is nothing but call it as capital, and external liability is nothing but call it as outside liabilities. And here we are going to get the assets, fixed assets or current assets, whatever it is. In the given question, what is the total assets of the firm? 1,20,000 is the total asset of the firm. I am going to record on the asset side 1,20,000 rupees. As you all know that the total assets must be equal to the total liabilities. So in the total, how much we are going to get So here also 1,20,000. And here also how much 1,20,000. And the given the outside liabilities amount. What is the amount of outside liabilities 60,000. So what is the balancing figure we are going to get 60,000. So this is how we are going to identify the capital contribution. What is the capital contribution 60,000 is the capital contribution. Or if you want, there is one formula is called as net assets. What is the formula for the net assets, sir? Total assets minus total outside liabilities. If you want, you can apply that one also, no problem. This is how I have discussed about the 3 simple MCQs. Sir, these are the basics. Most of the students, they are fear about the partnership. If you learn in this way, you will get the concept as well as you can able to attempt the biggest question of 14 marks also, no problem. I think, is there any doubts up to here? Okay guys. Next one, we are going to see about the treatment of interest on capital loan. So firstly, imagine he is a superstar Mahesh Babu. I think you know recently there is a picture with including the Rajamouli Garu. He is doing recently one teaser also come into the picture. Okay, no problem. So he is a Mahesh Babu, he is a partner, and this is a partnership form. First, the Mahesh Babu will give the loan to the partnership firm. Nothing but I can call it as a partner. The partner will give loan to the firm, and for that loan, the firm need to pay interest to the partner. So this is called as what ma interest on loan to the partner. First of all, interest on loan to the partner is an expenditure or income ma. It is an expenditure to the firm. Okay now. The rate of interest specified in the partnership deed means how much we can allow we can allow whatever the percentage they have mentioned in the partnership deed. If not specified in the partnership deed means how much they are going to allow 6% per annum will be allowed. What is the entry, sir? What is the entry for the interest on partnership loan? I think the interest on partnership loan is, first of all, it is an expenditure or income. It is an expenditure. The expenditure having which balance debit balance, what we need to do? We need to debit. So on the interest, that interest should be add back to the partner's loan. The partner's loan will be increases and the interest on loan is called as an expenditure. The loan is called as a liability having which balance credit balance. If it is increases, what we need to do? Credit. So what is the entry we need to record interest on loan account debited to partner's loan account. I think you know all the expenditures and incomes will be transferred to which account? Will be transferred to the P&L account at the end of the year. What is the entry Profit and loss account debited to interest on partner's loan. And next, when coming to the main objective of this partnership, the accounting for the partnership. Normally, so normal accounting, how the accounting will be there for the partnership form means journal entries, or we may have what subsidiary books. Only one will be there. If there is a journal, there is no subsidiary books. If there is a subsidiary books, there will not be any journal. So journal, ledger, trial balance, trading account, P&L account, but there is an important point here. The axis accounts are P&L Appropriation Account and Partners Capital Account, and balance sheet is as usual, you know. That means we have to focus on these two accounts because in the before chapters we did not prepare the P&L Appropriation Account and the Partners Capital Account. So many students are asking, sir, will this PDF will be available? Yes, this PDF will be available in the free resources of Shikara tutorials, but after completion of this chapter. Just listen and participate and give the answers, that's all. Okay, whatever the things I have discussed will be available after completion of this class. No problem, don't think about that. Okay, guys. And there is a special accounts like admission of a partner, retirement, death, dissolution, joint life policy, amalgamation. In the today's class, we are going to discuss about admission, retirement, death, and JLP policy. And the next part, I will cover the dissolution and amalgamation. No problem. These topics are also so easy, Amma. I will come with another part, but in this class, the time is not sufficient for this one. Next. Before going to further discussion, we have to understand the differences between the P&L account and P&L Appropriation Account. Sir, P&L account, in the P&L account, debit side we record the expenditures and credit side we record the incomes. Here also in the same way, P&L Appropriation Account also, debit side expenditure and credit side incomes. Sir, here in the P&L account, we record the expenses and incomes which are charged against profit. What is the meaning of charge against, sir? Charge against means nothing but even though if you are not having the profits, you have to incur certain expenditures. For example, salaries. Even though if you are having the losses also, you must and should give the salaries to your employees. Otherwise, the employees will not work in the organization. So, same way electricity, same way the rent of the building. So, all this come into the picture is called as charge against. Charge against means what ma? Fixed expenses even though in the case of losses. So, those are the items will be recorded in the P&L account. Then, what are the items will be recorded in the P&L appropriation account, sir? So, these kind of expenses and incomes which are appropriation of profits. What is the meaning of appropriation of profits, sir? Sir, the expenditures and incomes you have to incur only in the case of profits. Okay, now here what ma? Even though if you are having the losses, you have to incur the expenditure here. But when coming to the P&L appropriation account, only in the case of profits, you have to incur certain expenses. That expenditures will be recorded in the P&L appropriation account. And even though in the case of losses, you have to incur means those kind of expenditures will be recorded in the P&L account. I will say the example to you. I think you know the provisions. So what is the meaning of provisions, ma? Provision is certain safety amount what we are expecting. We may get the expected losses in the future. For example, is called as what ma? Bad debts. Provision for bad debts. Who said to prepare the provisions ma? As per conservatism concept or prudence concept. Not only the provision should be created as per the prudence concept, we can there is a point called as inventory will be valued at cost or market value whichever is lower. So important point, please remember who said to value the inventory with whichever is lower ma? Prudence concept. So as per that one, provisions will be recorded in the P&L account because it is compulsory need to be created. But I think you know the reserves concept. So reserves is also one of the safety amount, but reserve will be recorded in the P&L appropriation account because those are not compulsory. Provisions are compulsory. For that reason, we will record the provisions in the P&L account. Reserves are not compulsory. Reserves will be created only in the case of profits. For that reason, those items will be recorded in the P&L appropriation account. So expenses we have to be paid only in the case of profits will be recorded in the P&L appropriation account. Okay, guys. And next, we are going to see the format of P&L appropriation account. Sir, what is the starting point of P&L appropriation account, sir? The net profit. I think you know as well, there is a trading account. In the trading account, gross profit will be on the which side, ma? Gross profit will be on the debit side to gross profit. This gross profit will be transferred to credit side of P&L account. In the same way, whatever the net profit is presented in the P&L account debit side will be transferred to the net profit will be transferred to the credit side of P&L appropriation account. From this, we have to distribute. What we need to distribute to the partners, sir? First one is called as, before only we have discussed interest on, there is a interest on capital, interest on loan. That thing also we can record here, no problem. That interest on loan is what ma? It is a compulsory item. For that reason, interest on loan will be recorded in the P&L account. Okay, now even though if you are having the profits or not having the profits also, that interest on loan we have to pay. For that reason, that interest on loan will be recorded in the sorry guys, the interest on loan will be recorded in the P&L account, but interest on capital, salaries and commission will be recorded in the P&L appropriation account. First of all, we try to understand which point is an expenditure and which point is an income. Sir, interest on capital, it is an income, it is an expenditure, ma? It is an expenditure to the partnership firm. Sir, while discussing the partnership accounts, we have to think only from the point of view of partnership firm. Okay, now we should not think from point of view of partners. So must and should. So this thing you need to understand. In the same way, whatever the example we have discussed the previously. Imagine in this situation, partner of Mahesh Babu has given what ma? Capital. We have to pay to the partner what ma? Interest on capital. For that reason, we have to pay means what ma? That is an expenditure. For that reason, the expenditure of the interest on capital will be recorded on the debit side. And next one, salary is also an expenditure, will be recorded on the debit side. Partners commission is also an expenditure, will be recorded on the debit side. And next one, drawings. What is the meaning of drawings, ma? Imagine the partner and the business. Okay, na? Partner taken away the drawings, either maybe in the form of goods, cash or something. And partner need to pay what, ma? Interest on drawings. For that reason, interest on drawings in income. I think you know, in the nominal account, debit side we record the expenditures and credit side we record the incomes. So for that reason, interest on drawings will be recorded on the credit side of the P&L Appropriation Account. So whatever the balance is presented will be distributed to the partners in the profit sharing ratio. There is a one thing you need to remember. If the amount of profit is not sufficient, okay, it is sufficient only these three items, at that point of time the balancing figure will not be there. I think you are getting the point. First we have to satisfy with the factors. What are the factors, sir? Interest on capital, salary and commission. After satisfying these three factors, if you are having the profit, means then only you need to distribute to the partners. You will get a more clarity. Please wait with me second, and I will give the example also, no problem to you. So see this one, ma. So this is the very important example. Two examples I am going to discuss. From these two examples, one MCQ we are going to ask. Not only the basics will be useful here, amma, while doing the big sums, 14 marks questions also. If you know these examples in one by one, easily you can go through that one, no problem, amma. Okay, naga. Okay, guys, I am going to start. Please be very patient. A and B are the partners sharing in the ratio of 3:2. What is the profit sharing ratio, amma? 3:2. I think you know. For A, how much, amma? 3/5. For B, how much, amma? 2/5. How did we get the 5, ma? By adding the 3 and 2. What is the total amount? 5. So for A, what is the share? 3/5. For B, what is the share, ma? 2/5. So on the capital on 1/4/2024 is as follows. I think nothing but what, ma? It is called as a opening capitals. 1/4 means every point of time it is opening. The opening capital of A is 2 lakhs and the opening capital of B is 1 lakh. Always we need to calculate the interest on capital only on opening capitals. Please be remember. The interest on capital agreed to be how much, amma? 10%. Prepare the profit and loss appropriation account for the year ended 24-25. If the net profit is having how many cases, ma? 2 cases. These 2 cases are individual to each other. Okay, now. So we have to see the separate. Okay, now. First we are going to focus on case A. What is the profit? Net profit we are having, ma? The net profit we are having 40,000 in the case A. We are going to prepare which account, ma? P&L Appropriation Account. If you see here P&L Appropriation Account, the net profit will be recorded on the which side, ma? Credit side, because the net profit will be presented in the P&L account which side, ma? Debit side. For transferring one account to the another account, we will transfer to the opposite side of that particular account. So what is the profit we are getting, ma? 40,000. If you calculate the interest, how much percentage, ma? 10%. We have to apply on the opening capitals. Apply 2 lakhs into 10%. That is equal to how much, ma? That is equal to 20,000. Okay. And then after 1 lakh into 10%. That is equal to how much, ma? 10,000 rupees. What is the total amount required to satisfy the interest on capital, ma? 20,000 plus 10,000, that is equal to 30,000 rupees. But we are having the profits how much? 40,000. I think this 40,000 is sufficient to distribute the interest on capital. For that reason, 20,000 and 10,000 I have debited because it is an expenditure for the partnership firm. What is the remaining amount is presented, ma? 10,000. This 10,000 we are going to distribute the existing partners in a profit sharing ratio. So that means 10,000 into 3 by 5, that is equal to 6,000, and 10,000 into 2 by 5, that is equal to 4,000. Like this we will distribute in the case A. In the case A, whatever the profit is there, it is sufficient to distribute the interest on capitals. So this is a balancing figure, ma. If we are having the balancing figure, then only we can distribute. Otherwise, we cannot distribute. So go and see the second case. You will get a more clarity. See here, ma. What is the profit, ma? 24,000 only. The profit is having only how much, ma? 24. But in order to give the interest on capital, how much amount it is required? 30,000. But we are having 30,000. No. So for that reason, the total 24,000 we are going to distribute to the interest on capital only. Sir, okay, sir. We are giving to the interest on capital. Then how we can distribute this 24,000 to the A and B, sir? Normally, A need to get how much, amma? 20,000, and B need to get how much, amma? 10,000. In this proportion only, we are going to divide. What is the proportion, ma? 2:1. Yes or no? Yes or no, ma? So 2:1. In this proportion, whatever the amount we are having, what is the amount we are having, ma? We are having only 24,000. It is not sufficient to distribute only to the interest on capital. For that reason, the total 24,000 we are transferring to the interest on capital. But in what proportion? In the proportion of normally how much they are going to get, in that proportion we are going to distribute. So that means 2:1. 2:1 means how we are going to distribute, ma, here? 24,000 into 2 divided by 3, that is equal to 16,000. And 24,000 into 1 divided by 3, that is equal to how much, amma? 8,000. This is the way we have to distribute to the, we have to represent in the P&L appropriation account. Here there is no balancing figure and they will not get the partner's capital to the further. I think you understand very clearly. Here in this case, we are having the balancing figure. For that reason, we have distributed to the partner's capital in the profit sharing ratio. Once again, I am saying here how we are distributing the profit sharing ratio, na? Actual interest ratio, na, ma? Actual interest ratio we have distributed. Nothing but in the capital ratio. Nothing but what, ma? Capital ratio. This is how I have given a clear picture about the P&L appropriation account. There is another example also for you guys. Please wait. Please be very patient. So I will discuss each and every point. No problem. Suppose in the above example means what, ma? Including the example number 1, the partner A will get the salary of 300 per month and partner B will get what, ma? Salary of 1,200 per month. That means here we are having the two factors. First we have to give interest on capital and then we have to give the partner's salary, and then if in case anything is presented is called as a balancing figure, that thing will be distributed as a to the partners. Yes or no, ma? So here also we are having, there is an extra point, including the partner's interest on capital, we have to take what, ma? Salary is also another adjustment here. Here in this situation, how we will distribute, sir? First in the case 1, what is the amount of net profit, ma? 60,000. This will be represent on which side of the P&L appropriation account, ma? On the credit side of P&L appropriation account. On the credit side of P&L appropriation account, how much we are going to distribute? We are going to write, ma? 60,000. First we have to give what, ma? We have to give to the interest on capital. How much, ma? 2 lakhs into 10%, that is equal to 20,000, and here how much, ma? 10,000. So here the amount will be 20,000. Here the amount will be how much, amma? 10,000. The total how much, amma? Total 30,000. Yes. Still we are having the balance, na? Yes, we are having the balance. So that thing. And again, what is the salary we need to give, ma? 300 into 12 months. That is equal to how much, ma? 3,600. And 1,200 into 12 months. That is equal to how much, ma? 14,400. Up to here, what is the total amount, ma? So 30,000 plus 3,600 plus 14,400, that is equal to 48,000. So out of 60,000, 48,000 is sufficient to distribute to the factors. Yes or no, ma? After that, what is the balance we are having? The 12,000. If this balance is not presented, na, nothing will be distributed to the partner's capital. Are you getting the point, ma? Yes. For this situation, this 12,000 will be distributed in the which ratio, amma? Profit sharing ratio. Are you getting the point or not? Here the profit is sufficient, for that reason we are distributing in a easier manner. Are you getting the point? And next, in the case B. In the case B, see the what is the profit? Only 40,000. The 40,000 is sufficient to distribute the factors of first level. In order to distribute the factors, how much we required, ma? For this here 30,000, and here how much, ma? 15 plus 3, 18,000. Totally we need to get how much amount? 48,000 for the factors only. But here how much we are having? Out of 48,000, here we are having only the 40,000. That means it is not sufficient to distribute first the factors only. For that reason, out of this 40,000, we have to give in proportionate basis to the two factors, and there is no amount will be left for the share to the profits, the balancing figure. So out of this 40,000, first 5:3 basis we have to give. Why we need to give the 5:3, sir? 5:3 means nothing but wait a second, ma. So what is the proportion they are having? Here the 30,000. Here how much, ma? 18,000. Means what is the proportion of these two things having? Okay, na? 6 5s are and 6 3s are. That is nothing but what is the proportion, ma? 5:3. In this proportion, we are distributing the, first of all, whatever the 40,000 we are having. So 5:3. 5:3 means how we will get, ma? 40,000 into 5. Sorry guys, 40,000 into 5 divided by 3, that is equal to 25,000. And 40,000 into 3 divided by 8, that is equal to how much, amma? 15,000. Nothing but, once again I am repeating, 40,000 into 5 divided by 8, that is equal to 25,000. Yes or no, ma? And 40,000 into 3 divided by 8, that is equal to 15,000. First of all, we have distributed to the factors. And again, this amount is sufficient for original value? No. How much we required, ma? 30,000. But we are having only how much? 25,000. And again in the proportion of actual. What is the proportion of actual, ma? 2:1. 20,000 and 10,000, na? 2:1. In that capital ratio, we have to distribute once again. So 25,000 into 2 divided by 3, that is equal to how much we are getting, ma? 16,667. And 25,000 into 1 divided by 3, that is equal to how much we are getting, ma? 8,333 rupees. Once again, guys, here 40,000 is not sufficient to give the interest on capital and salaries only, because we required how much, ma? 48,000. But we are only having how much? 40,000. First of all, we are giving to the factors in the actual proportion. In that also it is not sufficient. We are giving to the capital ratio and the salary ratio, whatever they are. What is the salary ratio they are having, ma? 3,600 and 14,400. Nothing but 12 threes are and 12 12s are. Nothing but 1:4 ratio we are going to distribute this amount. So 1:4, in that proportion we are going to give. I think you understand a better picture about this one. Sir, I have totally discussed about the P&L Appropriation Account, how it is work. So that is the main objective, because in our accounting process, what are the process, ma? Journal ledger, trial balance, and then after final accounts. Here what we need to prepare, ma? Here final accounts, trading account, P&L account, P&L Appropriation Account. We know all the things, but we don't know how to prepare the P&L Appropriation Account. We have discussed in this class. I think you understand more clarity. Trust me, from these both examples, they are going to ask that they are going to prepare the MCQs. Be ready to answer those MCQs in the examinations. So what I have told you, they will frame in MCQ now. So they will frame like this. So see, we are having the two MCQs. Please participate with me. So X, Y and Z are the partners in the firm. At the time of division of profits for the year was disputed between the partners. The partners before interest on partners loan, how much, amma? 6,000. What is the meaning of this one? The 6,000 is nothing but a profit before interest on partners loan. And why determine the interest 24% on each loan? How much amma? 80,000. How much they are going to determine? 24%. But there was no agreement on this point. So there is no agreement means what ma? In the partnership deed, there is no condition to give the 24%. In the case of absence of partnership deed, what is the how much amount of percentage we can give? We can give only the 6%. But the students in a hurry manner, they will apply how much amma? They will apply 24% on the capital, but on the loan we should not apply the 24% because what ma? Because no agreement having the agreement amma. There is no agreement. For that reason we can only give how much amma? We can only give the 6%. We should not give the 24%. That means 80,000 into 6%, that is equal to how much ma? 4,800 rupees. Are you getting the point? To whom we need to give ma? We need to give to the Y. We need to give to the whom ma? Y. And next, what is the profit we are having ma? 6,000 na? Out of 6,000, 4,000 is belongs to whom? 4,000 is an interest on loan. That thing will be recorded in the P&L account because it is a compulsion. Even though you are having the profits or not having the profits also, interest on loan you have to give. It should be recorded in the P&L account. What I am saying, it should be recorded in the P&L account only. Okay na guys? So for that reason, the remaining profit only will be transferred to P&L Appropriation Account. So whatever the amount of profit ma, by net profit. So what is the total profit they have given? 6,000. But out of 6,000, how much amount has interest on loan ma? 4,800. Then what is the remaining value ma? 1,200. The 1,200 is totally is a balancing figure. Yes or no ma? Because there is no factor is presented here. So 1,200 is a total balancing figure. Sir, why you are not recording the interest on loan in the debit side of P&L Appropriation Account? It should be recorded in the P&L account only. Okay na? Now we need to distribute this amount to the partners. So what are the partners ma? In the what proportion? So we need to see here the partnership form. There is no agreement na? There is no agreement means what is the partnership ratio? Equal ratio. Nothing but what ma? 1:1:1. That means, so how many partners are there ma? 3 partners, X, Y and Z. So 1,200 into 1/3, that is equal to how much ma? 400. So 1,200 into 1/3, that is equal to how much ma? 400. And 1,200 into 1/3, that is equal to how much ma? 400. So but Y is also getting what ma? Y is also getting the interest on loan. So add back to the Y 4,800, that is equal to how much ma? Totally 5,200 for the Y. For the X how much ma? 400 rupees. And for the Z how much ma? 400 rupees. So what is the total answer? X is for 400, Y is for 5,200 and Z is for 400 rupees. I think you are getting a more clarity after seeing this MCQ. Yes or no ma? But the next MCQ will be some of the toughest because like second example will be there. Okay na? Sir, why are you saying the slow? I will go to the topic in a faster manner only, but you need to understand the basics. You need to understand my style. That's all. X and Y are the partners with the capital of rupees how much amma? 50,000 and 30,000 respectively. Okay na guys? So interest payable on capital, not on loan. Capital means we can record in the P&L appropriation, we cannot record ma. We can record in the P&L appropriation account. What is the rate ma? 10% per annum should be calculated on opening capital or closing capital should be calculated on opening capital. If the profit earned by the firm was how much 4,800. From these 4,800 first we have to give to what factor. If there is any balance is there, then giving to the whom then giving to the existing partners in a profit sharing ratio. What will be the interest on capital they're asking ma? Okay, we can calculate normally. Sir, what is the opening capital of X ma? For the opening capital of X is equal to how much? 50,000, and Y is equal to how much ma? 30,000. Yes or no ma? So 50,000. What is the percentage ma? 10 percentage, that is equal to 5,000. Okay na? And Y is how much ma? 30,000 into 10 percentage, that is equal to how much ma? 3,000. What is the total amount? 8,000 is required to give the interest. How much we need to give ma? 8,000. But we are having the profit is how much? We are having the profit is only 4,800. But how we can give this 8,000 ma? It is a difficult task. Are you getting the point or not? Okay, actually, how much is required? 8,000. But how much is the profits we are having? 4,800. That in this 4,800 we cannot give. For that reason, we need to apportionate in the basis of the actual interest how they are going to get, or easily we can apportionate in the basis of capital ratio. So now this 4,800 to be distributed in which proportion ma? To be distributed in 5:3 proportion. Whatever the amount is going to get by Y ma? 4,800 into 5 divided by 8, that is equal to how much ma? 3,000 is going to get by the X, and 4,800 into 3 by 8, that is equal to how much ma? 1,800 is going to receive by the Y. So this is an X and this is the Y. So what is the answer ma? 3,000 is to 18. Okay, now normally the people they will put the A answer, but A is a wrong one, because here we are having the sufficient profits to distribute the interest, or not having the sufficient profit to distribute the interest, not having the sufficient profit to distribute the interest. What is the case ma? This one in example 1, case B point. Yes or no ma? So like this they will ask the MCQs in the examinations. So this is the main total point. And next we are going to see the most important point is called as Partner's Capital Account. So first we have seen the P&L Appropriation Account, and next we are going to see the Partner's Capital Accounts. So under this Partner's Capital Account is having how many systems ma? 2 types of systems. So first one is called as fixed capital system, and second one is called as fluctuating capital system. Fixed means the capitals are fixed, they will not move one to each other. In order to not to move the capitals, they are going to open 2 types of accounts: partner's capital account and the partner's current account. In the case of fluctuating, only single account will be prepared. So partner's capital account only. There is no current accounts in this case. Sir, how we can identify whether they are following the fluctuating or fixed, sir? In the given question, they will give the 2 types of accounts: partner's capital account and partner's current accounts. You may see in this current account either in the liability side or either in the asset side. If it is showing in the liability side, means partner's current accounts are showing in a credit balance. If it is showing in the asset side, means partner's current account is showing in a debit balance. But in the case of partner's capital account, only fluctuating means compulsory they will show in which side ma? In the sale of liability side, because most of the times they are going to have only the credit balance, I think. So okay sir, in the case of partner's capital account, all the things will be recorded there itself, sir, we know. Well, coming to the partner's capital account and current account, what are the items will be recorded in the partner's capital account and what are the items will be recorded in the partner's current account, sir? So the amount at the time of beginning contribution by the partners along will be recorded in the partner's capital account. Only the opening capital will be recorded. Not only the opening capital, initial capital, additional capital, and drawings in the form of cash. These 3 items are recorded in the partner's capital account in the case of fixed capital. In the case of what ma? Fixed capital. The remaining all the transactions will be recorded in the partner's current account. Are you getting the point? Okay. And there is only one account, like a single person like me. Okay. Fluctuating system is a most favorable system because the student understand the fluctuating. You also know there is no toughest point here. In the case of fixed partner's capital account and partner's current account. In the partner's capital account, we are going to record only the initial capital, additional capital and drawings in the form of cash. Please remember. Okay, sir. How to prepare the capital account, sir? First, we can see the fluctuating and then we can see the fixed capital. See the fluctuating. First of all, understand what are the points will be there. I think already you know the capital account in the case of single entry system, or sometimes some of the people may call it as what incomplete recalls also. So we know opening capital will be on the which side credit side, because the capital is a liability. For that reason, liability always having opening capital on the credit side and closing capital on the debit side. These are the basic rules already we know. So next of all, additional capital. What is the entry for the additional capital Nothing but anything we have to give to the partner. Who has to give We have to. We means what Partnership form give to the partner means which side we need to record credit side, and partner have to give to the partnership form means which side we need to record debit side. Nothing but whatever the amount we have to receive from the partner will be recorded in debit side. Whatever the amount we have to pay to the partner will be recorded on the credit side. So what are the amounts we need to pay to the partner, sir? So here we will pay what additional capital also will pay, but we are going to write that by cash or bank. Interest on capital, who has to give We have to give because they have given the capital. On that capital we have to pay. For that reason, interest on capital also we have to give. For that reason will be recorded on the which side credit side. And salary and commission also we have to give. For that reason we have to record on the credit side. And in the case of profits we have to give. In the case of losses they have to give. In the case of profits we have to give to the partner For that reason I am recording on the credit side. In the case of losses they have to give to us For that reason I am recording on the debit side. Drawings, who has to give Drawings have to be given by the partner to the firm. For that reason on the debit side, in the same way interest on drawings. Once again, the interest on drawings is an income to the firm and interest on capital is an expenditure to the firm. Whatever the expenditures will be recorded on the credit side of the partner's capital account. What are the incomes? Nothing but partner have to give to us will be recorded on the debit side. In order to decrease the capital and in order to increase the capital. Why, sir? Because these are the liabilities. In order to decrease, we will record on the debit side. In order to increase, we will record on the credit side. Are you getting the point, So this is the overall conclusion how to prepare the partners. Nothing but capital only, But here it is a partnership. For that reason, they are going to call it as partners capital account. While coming to the in the case of it is a fluctuating only one account, partners capital account. In the case of fixed, in the partners capital account, opening balance will be there and additional capital will be there. Whatever the drawings in the form of cash only will be recorded, and remaining all these items will be recorded in where will be recorded in partners current account. Are you getting the point, So I am going to show that one also. So initial capital by cash or bank, additional capital also by cash or bank. So to cash or bank is nothing but drawings in the form of cash. That's all. These three items will be recorded in the capital. Why we are recording on the credit side? We know, sir. We have to repay to the partner, for that reason on the credit side. And they have to repay means for that reason we are going to record on the debit side. I think you are getting the point or not. And when coming to the partner's current account, so interest on capital, salaries, profit, drawings. What is the meaning of these drawings other than cash? The drawings in the form of cash means in the capital account. Drawings in the form of other than cash means in the partner's current account. Are we getting the point? The loss. That's all. So the whatever the overall capital account is there we are dividing into the two parts. Okay, some of the points will be recorded in the partner's capital account. Some of the points will be recorded in the partner's current account. That's all. But the side is same, side is different, but the side is same. This is the overall picture about what partner's capital accounts. So there is a one MCQ to you. In order to more better understanding, Fluctuating capital account means what, ma? Fluctuating means nothing but only one account will be prepared, or two accounts will be prepared, ma. Only one account. One account means nothing but what, ma? Only partner's capital account. In the partner's capital account, credited with, what are the things will be credited here? Additional capital, interest on capital, salary or commission, and profits. These are the items will be presented on the which side, ma? Credit side. See the answer. Interest on capital, which side, ma? Credit side only. Profits of the year, credit side only. Salary and remuneration to the partners, that is also credit side. Now here the answer is what, ma? Answer is not the C. Answer is nothing but D. Please correct this one. So this is the right one, and this is a wrong one. Okay, numbers. Because all the items we are going to see on which side, ma? Credit side of capital account. Sir, how I am revising means I am going to discuss the MCQ. Then only you will understand the concepts why we are doing this one. Okay, na? Because two MCQs they will ask from this basics only. Okay, na? And again there is a 5-mark question they will ask from this basics only. Okay, na guys. And next, there is a commission payable calculation. We can discuss after some time, no problem. Next, there is an important point called it as interest on drawings. Normally, the interest on drawings, it is an asset, it is an income and expenditure, ma. It is an income because partner will pay to us. Yes or no? How to calculate the interest on drawings, ma? Simple, sir. Amount of drawings into rate of interest. Okay. But, sir, what is the meaning of drawings, sir? Why the drawings will come into the picture in the case of partnership firm, sir? In the case of partnership firm, they are going to get the profits. The profits will be calculated or will be distributed only at the end of the year. But remaining 12 months will be there. In these 12 months, how the family of the partners will be survival, ma? It is a difficult task. For that reason, in order to fulfillment of household needs, they are going to take the drawings from the business. Are you getting the points, ma? Like dal, whatever the groceries, the rice, the makeup item for the wife of the partners, this all can be fulfilled only to the drawings. For that reason, they will take the drawings. How they will take the drawings, sir? In a 3 ways they are going to make the drawings. Drawings made at the beginning of every month. One of the partner, he will take the drawings every month beginning. One of the partner will take the drawings at the middle of the every month. One of the partner will take the drawings so every end of the month. So in the case, if any partner is taking the beginning of every month means, here we have to apply the average rate. Drawings into rate, it is a common. But at last 6.5 divided by 12 we have to put. Why, sir? Means if one partner is taking 1000 rupees every month ending, on the first month we are going to charge 12 months interest on the first 1000. On the second month which we are going to draw, how many months interest only we can draw? We can apply 11 months. So like that, 12 plus 11 plus 10 plus 9 plus 8 plus 7 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1 divided by average. Divided by how many? Divided by 12. Divided by 12. How much we are going to get? The average of 6.5. So like this you need to apply. Please remember, if any person is taking at the beginning means, at the middle means 6 months. How we are going to say the 6 months are simple, ma. If any partner is taking the first month middle means how many months? 11.5 and next 10.5. Like that if you calculate, at last we are going to get how much? 6 by 12. If any partner is taking at the end means, on the first time ending, he is going to get only 11. 11 plus 10 plus 9 plus so on to up to 1 divided by 12. How much we are going to get, ma? 5.5 divided by 12. So these are the most important points. Please remember. So beginning means 6.5 divided by 12. Middle means 6 by 12. If any partner is taking the drawings every month, ending means 5.5 divided by 12. So if a person is taking 1000 rupees every month, beginning means the rate is equal to 10% ma. How you are going to calculate? 1000 into 12 months. He is taking how many months ma? 12 months. Into rate 10% into 6.5 divided by 12. Like that you need to calculate. If any person is taking at the middle means 1000 into 12 into 10% into 6 by 12. If any person is taking at the end of the month means 1000 into 12. There also 12 times he will take ma. 1000 into 12 into 10% into 5.5 divided by 12. So like that you need to calculate. I will show the MCQs, no problem. See ma, this type of MCQs they will ask in the examination. If a fixed amount is withdrawn at the first day of every month, first day of every month means what ma? Beginning of every month of a calendar year by the partners in a partnership form. Then for what the period of interest on the total amount of drawings will be calculated. How many months interest ma? Beginning means 6.5, middle means 6 and the end of the month means 5.5. I think you understand the total picture. And next one, Mr. X is a partner of the firm. He withdraws 200 at the end of the month. And the end of the each month means how ma? 5.5. Yes or no? How we can calculate ma? Every month 200 rupees. That means 200 into 12. Okay na? Into what is the percentage rate ma? Rate is nothing but 5% into 5.5 divided by 12. If you solve this calculation, how much we are going to get ma? So 200 into 12 into 5% into 5.5 divided by 12, that is equal to 55 rupees. I think you are getting a more clarity now after seeing this MCQs. Yes ma, super participation. Thank you for your patience. Now we are going to see the what are the entries will come into the picture. If it is a fixed ma, fixed means two accounts will be there na. The interest on drawings will be get in the current account. Yes or no ma? Simple yes. In the current account, which side ma? Debit side. That means what is the entry? Partner's current account debited to interest on drawings. That interest on drawings will be transferred to P&L account, appropriation account ma? Appropriation account. If you see a fluctuation means only one account na. So partner's capital account debited to interest on drawings account debited to P&L appropriation account, because it is an income. For that reason, credit side of P&L account, appropriation account ma? Appropriation account. So these are the basics. I am slowly taking you, no problem. And next, interest on capital. So interest on capital is treated as appropriation of profits when and charge against profits when. In the case of losses, so there is a something point, we can no need to refer this point, no problem. Sir, in the case of fixed capital system, two accounts will be there. Interest on capital will be recorded in current account, which side ma? Credit side. What is the entry? Interest on capital account debited to partner's current account. This will be transferred to P&L appropriation account debit side. So P&L appropriation account debited to interest on capital account. In the case of fluctuation ma? Capital account. So interest on capital account debited to partner's capital account. P&L appropriation account debited to interest on capital account. So interest on capital will be always calculated on opening capital view no. If they are given the closing capital, we will do the reverse working and we will go to the opening capital. Okay na? So these are the certain points. And next we are entering into the main point. So whatever the points we have discussed, those are not the waste points. They are also useful to you. So please be remembered. Sir, we are entering into the main most important point is called as admission of a partner. Okay na guys? So please give me 1 minute. Okay guys, so what are the steps we need to see sir here? One by one we can discuss and we can solve the sum. Sir, you may have one prospect to that in the previous attempt they have given the admission. They may not ask you. But these steps we need to learn, then only we can do the retirement, then only we can do the debt. Are you getting the point? So in order to do the retirement of death also, we need to get these steps. This, if you follow these types, easily we can solve the question, no problem. So first we have to see a computation of new profit sharing ratio. Why we need to calculate the new profit sharing ratio, sir? Because whatever the old profit sharing ratio will be there, so we are having the two partners initially. One partner is adding 2 plus 1, that is equal to 3. So not like your perception, like husband wife, not like that. So normally 2 persons, 1 person is joined. How many members will be there? 3. The whole profit sharing ratio only will continue in the partnership form. New profit sharing ratio. For that reason, we need to calculate the new profit sharing ratio. First of all, we have to calculate this one. And next, revaluation of assets and liabilities. Distribution of reserves and accumulated profits. Sir, why we need to distribute these reserves and accumulated profits, sir? Because these reserves and accumulated and profits are belongs to old partners, ma. Because they sweat and soul. They have worked in the organization, and though these profits are belongs to the old partners. If you are not distributed these profits to the old partners, means these profits will be enjoyed by the new person also. For that reason, we have to distribute the whatever reserves and accumulated profits also. There we have to distribute to the partners. How to pass the entries totally I will discuss one by one, no problem. And next there is a point, important point is called as adjustment of goodwill, and then there is a adjustment regarding to the partners contribution. So these are the points one by one we are going to discuss. Okay, first we are going to target the new profit sharing ratio. So this is also one of the most important area. For how many marks, ma? 5 marks. Okay, Nama. So 5 marks. If you learn this point, 5 marks. If they have given the full-fledged sum also, for this they are going to give 3 to 4 marks also. Are you getting the point? So one by one we are going to learn. So please be very patient. So first one, computation of new profit sharing ratio. I will discuss the example one by one, and I will discuss the sums also to you. No problem. Please follow with me, and please take one calculator and rough paper and try to solve on your own also. A and B are the sharing in the ratio of how much, 3:2. This is a old ratio. Okay, na? Now C is admitted for a how much, 1/4 share. 1/4 share. Calculate the profit sharing ratio in each of the following cases. Sir, before going into that, I will like to explain you. Sir, there is one apple. There is one apple. This one apple, the total one apple, we are going to assume it as 1, or we can call it as this one only, nothing but 1 by 1. 1 by 1 is equal to 1 only. Okay, na? The total share, the total apple, the total share is nothing but how much, 1. If this apple is shared by 3 persons, how they will get the share? Means that one share they are going to share by 3 persons in 1:3. 1 by 3. That means what is the ratio? Every person 1 by 3, 1 by 3, 1 by 3. Are you getting the point? Okay, guys. So remember this story. Remember this story. It will be help you. Okay, na? How means out of one person we are going to share how much, ma? We are going to share 1 by 3. That is equal to how much they are going to get 1 by 3. Are you getting the point? Like that. Okay, na? There is another point to you. 1 by 3 and 1 by 2. There are 2 points, 2 sharing ratios. Which one is the big one and which one is the small one? The share of 1 by 2 is the big one. In the new denominator, the small number is there, means it is a high. In the denominator, a big number is there, means it is a low. 3 is the lowest one here and 2 is the biggest one here. Are you getting the point? So you have to remember, you have to get to know this type of things before going to the discussion. Okay, guys, the fractions. So again I am coming back. What is the old ratio, 3:2. C is admitted for 1/4 to share. Calculate the profit sharing ratio each of the following case. First one, no other information is available, then the balance in the form will be shared by the old partners in the old ratio. Sir, how to do in the case 1, sir? I will explain you, no problem. So case 1. What is the old ratio, 3:2. Yes or no? The old ratio is 3:2. What is the C's new share? C's new share, they are saying that 1/4. There is nothing information is provided now. Whatever the remaining share is there, that remaining share will be distributed by the old partners in their old ratio. How, sir? First of all, we have to find out the remaining share. So, what is the remaining share? I think you know the total form share is equal to 1. From this one, substitute the 1/4. Reduce the 1/4. How much we are going to get, ma? So nothing but in the denominator 4. So here we are going to image it as 1. So 1 into 4, 4. 4. The 4 into 1, how much, ma? 4 only. 4 minus 1, that is equal to 3/4 is the remaining share. This remaining share will be shared by the two persons. Who are the two persons? A and B. In which proportion, ma? This 3/4 share will be shared by A and B. Okay, na guys? A how much? Out of this 3/4, A is going to share in a proportion of old ratio. In a proportion of what, ma? Old ratio. What is the old ratio, ma? 3:2. That means here 3/5. Here how much, ma? 2/5. Are you getting the point, ma? From the remaining share, from the whole share? From the remaining share, 3 in the proportion of old. That means what, ma? 3/4 into 3/5. So how much we are going to get, ma? In the case of multiplication, we can multiply the numerator and denominator. So 3 3s are 9 and 5 4s are 20. Are you getting the point? So here how much, ma? 3 2s are 6 and 20. And what is the C's one, ma? 1/4. So in order to get the denominator 20, what we need to do, ma? We need to multiply with 5/5. That is equal to 5/20. What is the proportion, ma, here? Simple. 9:6:5. This is the new proportion. Nothing but new profit sharing ratio. I think you got the picture. Sir, nothing is mentioned. What we need to do, amma? If the nothing is mentioned, whatever the remaining share will be, will be shared by the whom? Will be shared by the old partners in the old ratio. That is only I have showed you. I think you understand clearly about this case 1. Okay, Nama. Next I am going to the case 2. C acquired how much, amma? Okay, na? Please remember that point also, 1/4. But this 1/4, he has acquired 3/6 from A and 1/6 from B directly. Whatever the having the share, na? What is the having the share of A, ma? The share of A is 3/5. From the 3/5, directly 3/6 is giving to whom? C. From the 2/5, 1/16 giving to whom, ma? C only. If you see the C's total share, 1/4 only we will get. How, sir? 3/6 plus 1/16. Okay, na? At that point of time, so 3/6 plus 1/16, if you add back, what we'll going to get means, so just a second, 16 into 6, how much more? 96. So 3/6 plus 1/16, that is equal to 96. So next one I will show you, no problem. Case 2. We are going to solve the case 2. What is the old ratio, ma? Old ratio is equal to 3:2. That means what is the A share, ma? A share is equal to 3/5 and B share is equal to 2/5. And C is going to get how much share, ma? C is going to get 3/6 share directly from A. That means what is the A's new share? A's new is equal to 3/5 minus 1 by 6. Yes sir Rama. How we can do the LCM? So 5 6 are 30, 6 3s are 18, minus 5 1s are 5. What is the amount we are going to get ma? 13 by 30. What is the amount we are going to get? 13 by 30. And B is also sacrificing na? Yes, how much ma? 2 by 5 minus 1 by 16 na? 1 by 16th. 1 by 16. What is the LCM we are going to get ma? 16 5s are nothing but 80. 16 2s are 16 2s are 32 minus 5. That is equal to how much ma? 32 minus 5, 27 divided by 80. 27 divided by 80. And then next, what is the C share ma? C share is nothing but 1/4 only. Yes or no? What is the total proportion of the C? How much ma? 1/4. But we need to get what ma? In the denominator, we have to see those things. How we will get means. So the new proportion will become 1 by 4. In the denominator, we need to get the 80. So 80 divided by 4, 20. So 20 is to 20. That is equal to how much ma? 20 divided by 80. But here we need to get the 80 na? 6 5s are 30. How to get 80 ma? 80 divided by 30. 2.6 2.6 into 2.6 divided by 2.6. How much we are going to get ma? 13 into 2.6, 33.8 something. So that is equal to 30. Is a 34 is to 27 is to 20. So this is the new profit sharing ratio for these fellows. Sir, what I am saying is, here they only given the clear picture ma. What is the clear picture they are saying ma? 3 by 16th, 3 by 6th share from A and 1 by 16th share from B. That means what ma? Nothing but directly we have to do this one only. So 1 by 16 or 1 by 6th, 1 by 6th or 1 by 16. So here, see the third case ma. C acquired his share equally from A and B. C acquired his share equally from A and B means what ma? Out of 1 by 4, 1 by 2. Okay na? What is the C's proportion? 1 by 4 na? This 1 by 4, half of the share get from A and half of the share get from B. Nothing but how much we are going to get, we have to see the case 3. See the case 3 ma. Whole ratio is equal to 3:2. Okay na? And then after, out of this whole ratio, 3 by 5 belongs to A and 2 by 5 belongs to B. Okay na ma? So what they are saying ma? Here they have not given the sacrificing portion directly, but indirectly they are giving. How sir? What is the A having ma? 3 by 15. Out of 3 by 15, how much he is giving? A is giving to C means nothing but out of 1 by 4 half portion. From B also same. 2 by 5 out of 1 by 4 how much amma? Half portion. Like that they are going to sacrifice. Are you getting the point? Now how much we are going to get ma? 3 by 5 minus 1 by 8. And here 2 by 5 minus 1 by 8. Do the LCM and you will get the answer. So 8 5s are 40 and 8 is 24. So 24 minus 5, that is equal to 19 by 40. Here how much we are going to get ma? 40 and 8 2s are 16 minus 5, that is equal to, here also how much ma? The same proportion, 11 by 40. And here what is the C proportion ma? 1 by 4. In order to get the denominator 40 means what we need to do ma? 10 by 10. Are you getting the point? So how much we are going to get ma? 10 by 40. What is the new proportion ma here? 19 is to 11 is to 10. This is the new profit sharing ratio. Sir, what is the difference between case A and case B ma? Here in the case A, please understand the point. In the case A, they have given 16th share directly. But here they have mentioned what ma? He is going to acquire his share equally from A and B. Okay na? Here the fourth case is also simple. Fourth case is also similar ma. C is acquiring his share of A and B in the ratio of 2:3. Before that 1:1 proportion. This 1 by 4th share in the proportion of 1:1 he is going to acquire in the case 3. But when coming to the case 4, that 1 by 4 share he is going to acquire in the ratio of 2:3. That means from A how much he is going to acquire ma? 1 by 4 into 2 by 5. And from B 1 by 4 into 3 by 5. So if you do this one, we will get the sacrificing. Okay na? Here when coming to the case 2, we no need to do such type of calculation. Why sir? Directly how much they are going to sacrificing they are given. For that reason, directly we have minus in the case 2. Directly we have reduced ma. Directly we have reduced, but instead of 3 by 6, I have taken the 1 by 6. There is a calculation mistake, no problem. Directly how much we are going to take ma? Here, directly we have taken the 3 by 6 and 1 by 16, but here we have taken the directly, we have done the certain calculation. We have done the certain calculation. That is only the main point. Please remember, if you are not understanding means, once again you go back and see. Sir, here we are not directly reducing the 1 by 4. Okay na? And 1 by 2. Why sir? Because whatever his 1 by 4 to share equally from A and B. Here what ma? Whatever acquiring the C na, that share they are going to take from A and B in the proportion of 2:3. That means 1 by 4th share into 2 by 5 and 1 by 4th share into 3 by 5. So like that proportion they are going to acquire. These 2 points are similar. Here instead of 2:3, here he is going to acquire from 1:1. Are you getting the point? So this is not a direct sacrificing portion. We are going to find out. Okay nama. So that 1/4 into 1 by 2 in the case 3, but 1/4 into 2 by 5 in the case 4. That is only the simple one. You try to do this case on your own, guys. Okay na. And next example, see this one. So D and E are the sharing the ratio of 7:3. For the D how much amma? 7 by 10. For E how much amma? 3 by 10. F is admitted as a new partner. F is admitted as a new partner. D sacrificed 3/10 share. 3/10 share means what ma? Directly he is sacrificing. That means out of 7 by 10, we can reduce directly how much ma? 3 by 10. We should not do certain calculation. Are you getting the point of his share? And he is sacrificing how much amma? 1/5 of his share. That means out of 3 by 10 minus 1 by 5. Directly we can do. Then we can get the new share of the D and E. So how to calculate ma? Easy. This is a case 2 of the above question only. So how sir? For D, the new ratio will get how much? 7 by 10 minus how much he is going to sacrificing ma? 3 by 10. That is equal to, if you do the LCM, 10 only we will get. So 7 minus 3, that is equal to 4 by 10 here. And for E, how much amma? 3 by 10th minus 1 by 5. If you do the LCM, how much we are going to get ma? 10. So out of this 10 only one time, so 3 minus out of this 2, oh sorry guys, is the LCM of 10. So here 10 how much amma? One time only. This one, okay, 2, 5 2s are 10, 5, 2 times 2 3s are 6 minus 1, that is equal to 7 by 10. And here, what is the F's proportion ma? F, here F is not having na. What we need to do means 3 by 10 plus 1 by 5. 3 by 10 they have taken from D and 1 by 5 they have taken from E. What is the total one ma? If you do again LCM 10. So 2 3s are 6 minus, sorry, plus 10. That is equal to how much ma? 16 by 10. What is the proportion ma? 4 is to 7 is to 16 is the proportion of this new profit sharing ratio. I think did you get this point? Here in the previous question they have given the 1/4 na. Here like this they have given they have not given they have not given the 1/4 share. Then how you can find out the F proportion ma? In the F proportion easy. 3 by 10 they have taken from D and 1 by 5 they have taken from me. We are adding the both shades. That's all. Like that we are going to get. Are you getting the point ma? Unable to see your chart. Just a second guys. Now we can see. Now what happened ma? 3 by 5 minus 3 by 6. Where it was. Okay. We can go to the further. What is the sacrificing ratio formula ma? Old ratio minus new ratio. Why the formula come into the picture old ratio minus new ratio sir? Because the old ratio is the bigger one and new ratio is a smaller one. Because before we are having the 2 partners and after we are having the 3 partners. If one apple is shared by the 2 partners means we will get a more. One apple shared by the 3 partners means we will get a less amount when compared to this one. For that reason old proportion is more than the new proportion. For that reason what is the formula? Old ratio minus new ratio. Here how to do the sacrificing ratio we can see here. What is the old ratio they have given ma? Old ratio is equal to 5:3. What is the new ratio they have given? New ratio is equal to nothing but this one is the new ratio and this one is the old ratio. 5:3:2. For the G and H only we are going to have the sacrificing proportion. Okay na? So for G how much amma? Old ratio minus new ratio. So 5 by 8 minus 5 by 10. That is equal to, so in the denominator we are going to get 80. So 10 5s are 50 and 8 5s are 40. That is equal to how much amma? That is equal to 10 by 80. And next H. H is nothing but 3 by 8 minus 3 by 10. That is equal to once again what is the LCM? 80. 10 3s are 30. 8 3s are 24. That is equal to 6 by 80. What is the sacrificing ratio? 10:6 is nothing but 5:3 is the sacrificing ratio. Guys, okay na? Guys, please respond ma. So like that we need to do the proportions. Okay nama? So this thing you have to try on this phone. I am leaving it off. These questions. And next coming to the revaluation account. So if you see the revaluation, there is some more questions also. You can do on your own the ratio proportions, no problem. Okay, there is one calculation mistake is happened. Okay, I can get through, no problem guys. Oh, okay ma. So thank you for your participation, Chandrasekhar. Okay, revaluation of assets and liabilities. Why we should do the revaluation sir? Because the same logic ma. So because of profit or losses of the old partners should not be shared by the new partners. For example, we are having one building ma. In the 10 lakh rupees is the actual cost. Now this building value in our books was 7 lakhs only. Building value in the books was how much amma? 7 lakhs. But the market value of this building is equal to 14 lakhs. What is the gain we are going to get at this point of time? 7 lakhs of the gain. If you sell this building now itself, means what is the amount of profit we are going to get? 7 lakhs. This 7 lakhs should be enjoyed by whom? Only old partners. Okay na? Because imagine the situation. If suddenly new partner came into the business and he is saying us, please sell that building because that building is not useful to us. At that point of time, if you sell means we will get how much amount? The same profit only. But before we are having the two partners, this profit should be shared by only the two partners. But unfortunately, if the new partner come into the picture means this profit will be shared by the three partners. The profit actually belongs to whom? The old partners only. For that reason, we have to do the revaluation before the new partner come into the picture. Because this gain should be transferred to whom? Old partners. Because up until now, who has there here? Until now, the old partners are only there. This profit belongs to the old partners. For that reason, we have to give in to the old partners only. Are you getting the point or not? Yes. How to do the revaluation, sir? In the event, we have to consider the revaluation. Increasing asset. Now, in this situation, increasing asset or decreasing asset, our book value of the asset is equal to how much? 7 lakh rupees. And our market value is equal to how much? 14 lakh rupees. So, this is called as, in this situation, we have to increase the building, we have to decrease the building, we have to increase the building. So building increases means asset having which balance? Debit balance. In order to increase, what we need to do? Debit. So for that reason, what is the entry? Asset account debited to revaluation account. If the asset is decreasing means same opposite, opposite. What is the meaning of this one? Our book value is having how much? 7 lakhs only. But if you see the market value, we are going to get how much? 6 lakhs only. That means our market value is less, means undervaluing or overvaluing. So in our books, there is a overvalue. We have to decrease the asset value. For that reason, what is the entry? Revaluation account debited to asset account. And next, if there is any unrecorded asset means we have to record. This is also same like a increasing the asset value. What is the entry? Asset account debited to revaluation account. And next one, liability. Liability increases means nothing but generally we are having the loan taken from the outside country due to the exchange rate difference as per AS 11. We have seen at that point of time the exchange rates will be more or higher, more. Based on that, normally we have to pay only 20 lakhs, but due to the exchange rate difference we are going to pay 24 lakhs. Now this is called as increasing liability or decreasing liability? Increasing. What is the entry? Liability is having the credit balance. In order to increase the liability, what we need to do? Credit. So revaluation account debited to liability account. If you want to decrease the liability means what we need to do? So liability account debited to revaluation. Same entry, opposite entry? Opposite entry. If it is unrecorded means revaluation account debited to liability. The same as the first case. Are you getting the point? These are the entries. So balance of the revaluation account will be transferred to the old partners in the old ratio. If there is any balancing figure in the revaluation account, will be transferred to the old partners in the old ratio. There is a concept called as Memorandum Revaluation Account. Normally, we should not do the revaluation, sir, because it is ultimately conflict between the going concern concept and cost concept. Because if you are recording the assets and liabilities on a market value means you are going to mislead the going concern. When you will recognize the market value means here in this year we are going to close the business means then only we will bring to the market value. But why we are bringing even though that is a ultimately conflict between the going concern also we have to do, because those profits should be enjoyed by the partners. But sometimes they will ask to us there should not be any change in the value of assets. At that point of time we have to prepare the memorandum revaluation account. At that point of time what we need to do means the balances of the memorandum. So again, what we have reducing the effect of the revaluation by way of the memorandum revaluation. Whatever you have done, if it is increases, you have to be credited into the revaluation account. Yes or no? For example, so memorandum revaluation means first we will do the revaluation as usual, sir. Increase of asset, okay na. and next one decrease of asset, increase of liability, decrease of liability. We will share the whatever the amounts are there to the partners, and again whatever you have recorded in the revaluation account will be transferred to opposite side of memorandum revaluation account. Are you getting? That means whatever the effect first we have increased in the, and again we need to decrease means which side ma? Same side, opposite side, opposite side. If in order to increase you have record the asset on the credit side, so again that effect should be nullify means we have to record on which side ma? Credit side. And this time on the second time what you have nullified that effect, that amounts, that balancing figure should be shared by the all the partners in the new profit sharing ratio. But when coming to the balancing figure in the revaluation account, that thing we should share to the new old partners in the old ratio. Are you getting the point ma? I think this concept you know. I am not going to stay more. So until now, what are the steps we have to follow in the admission ma? First one is a profit sharing ratio. We have to follow. We have discussed the examples. That examples are sufficient. So we can discuss some more examples while discussing the questions, and revaluation of liabilities also completed. Next we are going to see the distribution of reserves and accumulated profits, and then goodwill account, and then capitals. Please wait ma, we are going to solve the question. Please give me 15 minutes of time, that's all. See ma, this is called as what ma? Transfer of undistributed reserves and profits of the old partners in the old ratio. Sir, if you see the trial balance sheet, the reserves will be available on the credit side ma, because the reserves will have the credit balance, because those we are going to treat it as liabilities. Sir, we need to do these adjustments. Why we need to do ma? Because these reserves are accumulated and maintained, and the savings are maintained by the old partners. That accumulated profits and reserves should be belongs to whom ma? Should be belongs to the partners only. Just a second guys. Okay, now we can continue. Belongs to whom ma? Partners only. For that reason, old partners, for that reason we have to reduce. So which reserves we can give, sir? General reserve we can give. What is the meaning of general reserve ma? We can utilize for any purpose. And next there is a concept of workman compensation fund and interest fluctuation fund. We can discuss in the middle, in the down, no problem. Provision for bad debts, we can charge to the profits. This is a charged about the profits, so for that reason we should not distribute this one above against the profit we have made. Yes or no? And next P&L account, credit balance means we can distribute, no problem. Joint life policy reserves also we can distribute. So what is the entry, sir? Having which balance amma? Having the credit balance. In order to decrease, what we need to do? Debit. So reserves or profits account debited to old partners in a which ratio amma? Old ratio. In the question they have given that the general reserve to be retained, then we should do the following manner. Retain means what ma? Okay, retain. First we have to do this one, reserves account debited to old partners in the old ratio, and again whatever the reduced reserves we need to increase. In order to increase, what we need to do ma? Credit, but we should distribute to the all partners in a new profit sharing ratio. So reserves account debited to old profit in the old partners in the old profit sharing ratio, and all partners in a new profit sharing ratio to general reserve account. I think you understand. If the question is saying we should not change means first written off and then again rise. Are you getting the point? And next there is an important point in with respect to the investment fluctuation fund, and a next one is called as what ma? Next one it is a Workman compensation fund we can discuss. So first one, investment fluctuation. We will create this fund because the investments will be fluctuated based on the market values. So nothing but this is a reserve, nothing but investment fluctuation reserve, like that. The investment fluctuation reserve is a specific accounting provision used in the business, including the partnership form also. Whatever the business they are going to utilize, the partnership form also will maintain the investment fluctuation reserve to manage the impact of fluctuation in the market values of the investment portfolios. So normally the businesses also will maintain one portfolio. What is the meaning of portfolios? Are the different ways of investments combinedly into a one group is called as a portfolio. That portfolio value will be depend upon whom? Depend upon the market value. Suppose the total investment we have made 1 lakh ma. But when compared to the market value, that is only 90,000. This 10,000 we will lose the loss, no? For that reason, in order to get the future estimated losses, we are going to do it what ma? We are going to create the resource. So here see the fluctuation reserve is how much ma? Fluctuation reserve is 60,000. What is the investment cost we have done? 4 lakhs. So case 1, when the investment market value is not given. So market value of the investments was not given means the total 60,000 we are going to transfer to the old partners in a old profit sharing ratio. In the case of when the investment value is market value, investment which value market value is 4 lakhs or above. At that point of time also the reserve is not needed now. For that reason, investment fluctuation reserve account debited to old partners in a old profit sharing ratio. I think you understand the case 1. What is the case 1 ma? If the market value is not given means we are assuming it as whatever the investment is there of 4 lakhs, that 4 lakhs is maintaining as per the market value. For that reason, the total amount of 60,000 we are going to distribute to the old partners in a old profit sharing ratio. For suppose if the market value given ma, but the market value is 4 lakhs and above, that means as per the market value we are not going to lose anything. If we are going to lose anything means then only we will set off that loss with the reserve. Are you getting the point? So now we no need to set off that reserve to the investment. For that reason, investment fluctuation reserve account debited to old partners in a old profit sharing ratio how much ma? 60,000 and 60,000. There comes the third case ma. When investment's market value is 3,70,000. What is the investment value we have invested ma? 4 lakhs is our investment value. But as per the market value, what is our investment value ma? 3,70,000. That means how much amount we are going to lose ma? 30,000. That 30,000 we should not transfer to P&L account, sir. We should set off with the provision. What is the entry we are going to get ma? Investment fluctuation reserve account debited to investment account 30,000 and 30,000. Okay na? The remaining 30,000 only we should transfer to the old partners in a old profit sharing ratio. I think you understand the clear picture about the differences between case 2 and case 3. Because we have suffered the loss, the difference between 4 lakhs and 3.7 lakhs is equal to 30,000. This 30,000 we should not transfer to the P&L account, we should set off with the reserve, because whatever the reserve, the same case ma, in case of having the PBD, the bad debts will not be transferred to the P&L account. What is this, instead of transferring to the P&L account, where we will transfer ma? We will transfer this bad debts to the provision for bad debts account. Yes or no? What is the entry in that point of time? PBD account debited to bad debts account. Here also same ma. Investment fluctuation account debited to investment account only. Are you getting the point? The remaining amount 30,000 only will be transferred to the partner's capital account. When the investment market value is 3,10,000, sir. 3,10,000. Here what is the loss they are going to suffer ma? 90,000. But what is the provision we have created? Only 60,000, and extra 30,000 will transfer from the revaluation account. Here nothing will be transferred to the partner's capital account. Are you getting the point ma? These are the certain cases you need to remember. The very, very, very important concept. So many students, they don't know the basics. For that reason I am going to teach from the basics onwards. And whatever the same concept will be applicable from compensation also, you can refer this one, no problem. And next we are going to see about the goodwill, a very, very, very important concept. Without the goodwill adjustment, no sum will come into the picture. Investment fluctuation fund is a very important one. You have to refer must and should. Okay na guys? So until now, is there any questions ma? You can ask to me. I can say the one another time also, no problem. We have completed the 3 points. New profit sharing ratio, PSR we have completed, and next one we have completed the revaluation, and next one we have completed the accumulated reserves and all the things. Okay na guys? And next we are entering into the goodwill. The goodwill is a good name or a reputation to the business, which earned by the firm through the handwork or honesty of the owners. The goodwill is nothing but is a prestige thing or a reputation in the market. The types of goodwills are two types, ma. Purchased goodwill and self-generated goodwill. So purchased goodwill means when we'll get into the picture, ma. For example, that good while purchasing, for example, we are having a M limited. Okay, na. So we have purchased that M limited and we have changed the name as B limited. Okay, na guys. While purchasing, actually we need to pay 10 lakhs is sufficient. The net assets, I think you know the net assets formula, assets minus liabilities. For this reason, we have to pay only 10 lakhs, but we are paying 15 lakhs. The additional 5 lakh is nothing but what, ma? Additional 5 lakh is nothing but goodwill. So this is called as purchased goodwill. We did not develop the goodwill, the name. It is not a self-generated. It is a purchase. While purchasing the business from others, we are paying the higher amount than the whatever the actually we have to pay. That amount is called as what, ma? Purchase. When a business is purchased, the excess of purchase consideration of its net assets is called as a purchased goodwill. Characteristics: it arises on the purchase of the brand. Consideration is to be paid. It is to be recorded in the books of accounts. This should be recorded, shown in the balance sheet. Asset side should be amortized. Whatever the fixed assets, we are going to call it as depreciation. For the goodwill, we are going to call it as amortization. And next, self-generated. What is the meaning of self-generated, sir? Self-generated goodwill is also called as inherent goodwill. It is internal generated goodwill which arises from a number of factors that are running the business process due to when it was able to earn the more profits than the future. Normally we need to earn 1 lakh rupees profits only, ma. How much we need to get? 1 lakh. When compared to the other business as a competitor is going to earn only 1 lakh. He is also doing all the activities. Whatever the products we are selling, he is also doing the same type of products. So he is getting only 1 lakh, but we are getting 5 lakh rupees as a profit at the same period. So here this is called as inherent goodwill. Based upon having the goodwill only, we are getting a more number of profits. For that reason, this is called as what, ma? Inherent goodwill. Generated internally over the year as per 26 AS intangible assets not recorded in the books of accounts, ma. We should not record the self-generated goodwill, but we can do the accounting treatment for the purchased goodwill. There is a different kind of two options. You need to learn the basic knowledge. They may ask the MCQ for you also. So methods for valuation. Coming to the entering into the main part, methods for valuation of goodwill: average profit method, super profit method, capitalization method, and annuity method. So from here also they may ask you the MCQ, or this is the main important calculation for the biggest sums. Are you getting the point? So first, average profit method. What is the goodwill formula, ma? Average profit into number of years of purchase. The average profits are how many types, ma? Two types: simple average and weighted average. I think you know the simple average, ma. What is the meaning of simple average? Sum of observations divided by number of observations. Here also sum of profits divided by number of years. When coming to the weighted average, what is the formula, ma? Sum of weighted profits divided by sum of weights. When we have to use the simple average, sir, and when we have to do the weighted average means, simple average will be followed when it is having not having the increasing trend or not having the decreasing trend. Okay, na, there are fluctuating from 1 year to 1 year, it will be increases, another year it will be decreases of profits. At that point of time, we have to use the simple average. Or some of the situations they ask you in the examination, please follow the simple average. Then only we will follow the simple average. Most of the times we will follow what, ma? Weighted average. The weighted average will be followed in the case of increasing trend of profit or decreasing trend of profit. Okay, nama. So, and there come the most important point. So profit is nothing but net profit add or minus adjustments. In some of the situations, we may get the abnormal profits or abnormal losses. Okay, now when income from sale of fixed asset, ma, income from sale of fixed asset is not a normal course of business profit. Yes or no? That thing we have to reduce. Normally incomes are added to the profits and expenses are reduced from the profits. This one added, na, for that reason we have to reduce from the net profit because it is a normal It is not a normal income. It is an abnormal income type because it is that income we are getting from sale of fixed asset. Loss from sale of fixed asset means already we have reduced now while calculating the net profit. For that reason, we have to add back. And next, abnormal loss is same like this one only. Already we have reduced the loss. That is an abnormal loss. We should not reduce there. But if we are reduced, for that reason we have to add abnormal income. Already you have added at the time of calculation of net profit. For that reason we have to reduce. So these are the main points, sir. The students are doing mistakes here only. If you sum up all the items, we can do one question. Are we getting? Please wait, sir. So see this example. They are given the 4 years. Okay, na 10. So see here the trend was what increasing trend only. But even though I am doing the average profit and simple average. So 2 lakhs plus 3 lakhs plus 4 plus 5. Total how much? 14 lakhs divided by 4 years. How much we are going to get? 3,50,000. So average profit into number of years of purchase. How many years of purchase? 2 years of purchase. That is equal to how much we are going to get? 7 lakhs. This is called as an average method. Okay, na? So this 7 lakhs is the total goodwill of the firm, not a particular partner. If you want to calculate the weighted average, means we have to open the 4 columns: year, profits, weights, and weighted profits. In the year we have to write the years 10, 11, 12, and 13. We are good. Sorry guys. In the profits we are going to write the profits, and we have to give the weights. For latest year we have to give the more weight. What is the latest year? 2013 is the latest year. For that year we have to give the more weight. So 4, and then the previous when the years are going faster, means what we need to do? We have to give the less weight. So 1, 2, 3, 4. For that reason we have given latest year more weight, and then old years are less weights. So we have to multiply with this one. So 2 lakhs into 1, that is equal to how much? 2 lakhs. 3 lakhs into 2, that is equal to 6 lakhs. 4 lakhs into 3, that is equal to 12 lakhs. 5 lakhs into 4, that is equal to 20 lakhs. So the total weight is equal to 10, and the total weighted profits is equal to 40 lakhs. So what is the formula? Total weighted profit divided by total weight. So 40 lakhs divided by 10, that is equal to 4 lakhs. So weighted average into number of years of purchase of 2 years, that is equal to how much? 8 lakhs. Guys, okay na? I think you all know. For that reason I am going somewhat fast. And next, super profit. Super woman, like that we're having what? Super profit. Sir, what is the meaning of super profit, sir? Normally we are going to expect in the future we may get the 10,000 profit, but we are getting how much, sir? 20,000 profit. How much extra profit we are going to get? 10,000. This is called as super profit. Nothing but whatever the profit we are going to expect, but we are getting a more number of profits, means the difference between the actual profit and expected profit is called as a super profit. Sir, how we can calculate the actual profit, sir? Sir, average profit, nothing but what? Simple average or weighted average. Okay, na? This thing we are going to get. Normal profit, that means nothing but this is we are expected future. What is the meaning of normal profit, sir? Sir, we have invested 10 lakhs, sir. We have invested 10 lakhs into the business. On this, we are going to get only 10% as a profit is expected by us. That means what is the profit we need to get? 1 lakh is sufficient for me. 1 lakh is sufficient for me. But if you do the average profit, if you apply the simple average or weighted average, that is nothing but what? This is the actual profit we are going to earn. So actually we are going to earn 4 lakhs, but as per our expectation, how much we are going to get? Only 1 lakh. So what is the difference? The difference 3 lakhs is called as nothing but super profit. So how will get the normal profit? Capital employed is nothing but whatever the capital we have made. So how will get the capital employed? Either by adding the total capitals, or there is a formula called as total assets minus outside liabilities. First of all, firstly we have done an example now how to find out the capital means total assets minus outside liabilities. So if you do that, this one also we'll get the capital, or sum of all the partners capital also we can get the answer. Are you getting the point? So normal profit, average profit means either simple average or weighted average, minus we'll get what ma? Minus we'll get the super profit. Okay na? The super profit into number of years of purchase, we'll get what ma? Goodwill under super profit method. We can solve one question, we'll get a more clarity. Please wait. So first average profit we can see. Sir, average means simple average, sum of the profits divided by number of years. Okay na? So 2008, how much sum of 40, but including the abnormal gain, how much? 5,000. What we need to do the abnormal gain ma? Normally this gain included in 40,000 because the incomes will be added at the time of what ma? Calculation of profit, but the expenditure will be reduced. But here income added na, reduce that one. What is the actual profit of this year ma? Is nothing but 40,000 minus 5,000, that is equal to how much? That is equal to 35,000. Here what is the profit? After charging the abnormal loss of 10,000. Sir, normally this loss will not be coming to the picture. Abnormally it is coming. That means the loss you have already reduced from the profit. Now what we need to do ma? You need to add back that thing. So 50,000 plus 10,000, that is equal to 60,000. So these two adjustment we have to do. What is the goodwill? Based on 1 year purchase of average profit means, so last 2 years is simple ma, I am doing the simple average. So 35,000 plus 60,000 divided by 2, that is equal to how much ma? So 35,000 plus 60,000 divided by 2, that is equal to 47,500. They're asking us what ma? Average profit only. What is the average profit ma? 47,500. If in case goodwill means 1 year purchase, okay, 1 year purchase means how much we are going to get ma? 47,500. Are you getting the point ma? So like this we have to do. So abnormal items we have to eliminate. Abnormal income means we have to reduce. Abnormal loss means we have to add back because we have already reduced. So this is called as average method. Well, coming to the next super profit ma. What is the meaning of super profit ma? Whatever the average profit minus expected profit. I will get the expected profit ma. Whatever the capital we have invested into the expected rate of return, that is called as NRR, is nothing but normal rate of return. Okay sir, the firm employs 2 lakh rupees as a capital. Okay, what is our capital ma? 2 lakhs directly they have given. What is the normal rate of return they are going to expected? They are expecting 10%. Our capital is 2 lakhs ma. On that 2 lakhs, what is the expected rate ma? 10%, that is equal to how much? 20,000 is our expected profit. But what is the profit we are going to get actually? 30,000. Then what is the super profit ma? So 30,000 minus 20,000, that is equal to how much ma? 10,000 is the super profit. The 10,000 into how many years of purchase ma? 3 years. So into 3, that is equal to how much ma? 30,000 is the goodwill of a firm, not a partner. Are you getting the point ma? Like that we are going to solve. Sir, these MCQs definitely will come into the examinations ma. 4 marks MCQ, or they may ask this calculation as a 5 marks also. Okay guys? Okay, without any late I am going to complete, no problem. So until now we have completed still for 1 hour 50 minutes. Please wait for 1.5 hours sir. Still wait for 1.5 hour. I'm going to complete the admission, retirement and death. Okay na? Please wait. Simple average completed, weighted average, super profit also completed. Next, capitalization method sir. Here the reverse will be there. How means? The so much interesting. If you understand the logic, easily you can use the capital employed also. So the normal capital or expected capital. Okay na? This is our expected capital sir. Okay. How will get the expected capital ma? Is average profit divided by NRR. Before we are having one thing. We have a capital into NRR, we have get what ma? Profit. We get what ma? Profit. Here what ma? We need a capital. So capital is equal to profit divided by NRR. That thing only we are doing. Are you getting the point? So average profit divided by NRR will get the normal capital employed. But actual capital what we have done? That means whatever the profit is there now, for that profit, what is the amount of capital we need to put? Okay na? So our actual profit is 25,000, sir. Okay na? So divided by NRR, that means what ma? Our expected return into means we will get the profit now. So divided by 10%. So 25,000 divided by 10%, that is equal to how much ma? So in order to end the 25,000 profit, we need to put how much ma? 2,50,000 capital. In order to get the 25,000 profit, we need to put how much? 2,50,000. But we have kept only 1 lakh. We have kept only 1 lakh. So the difference is between the 2,50,000 and 1 lakh is how much ma? 1,50,000. That is only the goodwill. Are you getting the point ma? So what is the previous thing we have done in order to get the super profit means? So how we have identified the normal profit, sir? What is the formula? Normal profit is equal to capital employed into NRR. Okay na? Now in the case of normal profit, we are going to have the actual profit ma. Okay. So capital employed into NRR. So we need to get the capital employed, but we know the actual profit and we know the NRR. How we'll get them? So capital employed is equal to actual profit divided by NRR. So here the main objective is different, sir. Whatever the profit we are going to get now, for that profit, how much amount of capital we have to invest? That one and minus the actual capital. How much we have kept? Okay, now the difference between the two things is called as what ma? Capitalization method. Based on this one, we are going to see one MCQ. The profit of 3 years they have given. What is the 3 years ma here? 42,000, 39,000 and 45,000. Okay na? So and capital employed is how much ma? 4 lakhs. This is the actual thing. This is actual capital we have put. The normal rate of return is how much ma? 10%. The amount of goodwill to be calculated on the base of what ma? Super profit method 3 years. Super profit means easy ma. So super profit means whatever the average profit and capital employed. So what is the capital employed for us? 4 lakhs. Okay. First of all, we are going to identify the average profit. So AP is nothing but not an Andhra Pradesh average profit ma. How will get the average profit ma? 42,000 plus 39,000 plus 45,000 divided by 3. That is equal to how much? 42,000 is the average profit. What is our normal profit, sir? Normal profit is equal to capital employed into normal rate of return. Nothing but expected profit. So capital employed is how much ma? 4 lakhs into 10%. That is equal to how much ma? 40,000 is the expected profit. But how much we are going to get? 42,000. So differences between these two, how much ma? 2,000 into how many years of purchase ma? Into 3 years of purchase. That is equal to 6,000 is the goodwill under super profit. Now we are going to see what ma? Capital employed. What is the capital employed ma? Average profit divided by NRR is nothing but that much capital we have to put. But they will give what my actual capital. Difference between the how much capital we have to put minus actual capital. So we have to use which method ma? Capitalization method. The following information given. The total capital employed by the firm is how much? 8 lakhs. Normal rate of return is 15%. Average profit is nothing but what ma? 12. So for the 12 lakhs, in order to end the 12 lakhs, how much amount of capital we need to put ma? Divided by 15%. That is equal to how much? 12 lakhs divided by 15%. That is equal to 80 lakhs. In order to get this much amount of profit, I need to invest 80 lakhs, sir. But how much I have invested? I have invested only 8 lakhs. Okay, now the differences between the 80 lakhs and the 8 lakhs is nothing but how much ma? 72 lakhs is the profit as per what nothing but goodwill of the form of capitalization. Sir, in the capitalization method, we should not multiply with the number of years of purchase. Be important ma. Please remember, in the case of capitalization method, we should not multiply with the number of years of purchase. And next, a form in the profit, this thing you can do on your own, the capitalization method. Okay, there is an example you can do on your own. I am not going to stitch ma. And next, now we know how to calculate the goodwill of the firm. Now, if in case the goodwill accounting treatment in the case of changes in PSR, admission, retirement and death. So in the case of change in PSR, keep it as no problem. When admission, in the case of admission, what is the accounting treatment, sir? Means, sir, here comes the important point. Entries of the goodwill adjustment in the case of admission. If the incoming partner brings the goodwill, if that incoming partner bringing the goodwill means what is the entry, sir? Cash or bank account debited to incoming partner account, because cash coming, who is the giver ma? Incoming partner, nothing but new partner is the giver. Debit the receiver, credit the giver. As that point of time we are going to credit. Sir, so many people they are going to think here we have to write the goodwill. Sir, we should not write the goodwill, sir. What we are going to get? Cash or bank. So cash or bank account debited to incoming partner. This incoming partner amount we should reduce with the sacrificing partners. This incoming partner have to give that goodwill amount to the sacrificing partner. That means the incoming partner capital we have to reduce. The capital is having which balance ma? Credit balance. That balance we have to reduce. For that reason we are going to do the debit. And sacrificing partners capital we have to increase. For that reason we are doing what ma? Credit. So what are the entries? Please remember ma, if the incoming partner bringing the goodwill into the firm, in the case of admission means cash or bank account debited to incoming partner account debited to sacrificing partner. If you want, you can pass the combined entry also. What is the combined entry ma? So this incoming partner and incoming partner will be strike it off. What is the net entry we are going to get? Cash or bank account debited to sacrificing partner. This is the point at which point of time brings or not brings or brings. If it's not bringing, if it does not bring means we have to rise and return off. Rising means what ma? Goodwill has to be increased. So increasing goodwill means what we need to do? Goodwill account debited to old partners in a old profit sharing ratio. And then again we have to reduce like reserves only. Are you getting the point? Reserve account debited to old partners old ratio. And again we have to be maintain a same value means what we need to do ma? So all partners account debited to goodwill account. If you want you can do this one, or if you want you can pass directly this entry also. So remember ma, in order to do this one, this is the safest one, because here you know the old ratio and new ratio directly we can complete. No need to find out the sacrificing ratio here. So most of the times they will give what ma? The partner will be admitted without the bringing into the goodwill only. At that point of time, please remember, no need to find out the sacrificing ratio. At which point of time you need to find out the sacrificing ratio, sir? When he is bringing, at that point of time only you need to find out the sacrificing ratio. If he is not bringing, rise and written off. He is bringing cash account debited to sacrificing partners, or otherwise cash account debited to incoming partner account debited to sacrificing partners. Are you getting the point or not, sir? Is there anything doubt ma? No. In the case of retirement, what is the entry, sir? The gaining partners give the goodwill to the sacrificing, nothing but going retiring partner or death partner. At that point of time the gaining partner's capital have to be reduced and retiring partner or deceased partner capital account have to be increased. For that reason we are going to do what ma? Credit. So what is the entry ma? Gaining partner account debited to retiring partner or deceased partner. In the case of admission, once again sir, if he is bringing means what is the entry ma? Cash or bank account debited to incoming partner account debited to sacrificing partner. If he is not bringing means rising and written off. At the time of rising we have to share to the old partners in the old profit sharing ratio. At the time of written off we have to share to the new partners in the new profit sharing ratio. Are you getting the point? So this is only conclusion. If you know this conclusion, easily you can do the goodwill adjustments. Okay, now how to find out we have learned, and how to do the accounting treatment also we have known. And next we are entering into the very important point. If you want, you can solve this one ma. If the incoming partner brings the goodwill means what we need to do ma. So X and Y are the sharing profits and losses in the ratio of 2:1. They are taken Z as a partner, and a new partner profit sharing ratio is how much ma? 3:2:1, and Z is bringing 4,500 as a premium of goodwill. Then full value of goodwill will be how much ma? If it is bringing, what is the share ma here? 4,500, but they're asking what ma? Full value na. This 4,500 for how much share ma? For a share of 1/6. But I need to get for full. Full means what ma? For one how much? For one how much? How we can do this one calculation ma? Cross multiplication. So 4,500 into 1 divided by 1/6. If this 1/6, shall I write like this ma? 4,500 into 6/1, nothing but into 6. How much ma? 4,500 into 6, that is equal to 27,000 is the answer. Are you getting the point? Simple questions they are asking, but the students are unable to put the right answers. Okay, next one. Premium of goodwill always distributed among the old partners. In which ratio? Premium of goodwill means that particular new partner, the particular incoming partner bringing the goodwill. That means at that point of time, that incoming partner has to give to whom? Sacrificing partners in a sacrificing ratio. So please remember these two MCQs, then ask in the examination. If the incoming partner does not brings means what we need to do ma? Rise and written off. At that point of time, goodwill will be there, will not be there ma? Goodwill will not be there. First we will increase the goodwill and we will reduce the goodwill. Goodwill will not be there in the examination. If you want, you can read this question, no problem. The important known point. Okay, if it is a self-generated, we should not. So we have to write off the old partners in a old ratio as per 26 AS. So this will not be given in our examination, no problem. So adjustment of capital. Sir, adjustment of capital, I can say you no problem. When new partners capital is not given, when new partners capital is not given, the new partner has to bring in the proportion of the capital of to the share of profit. To the share of profit. I will explain you, no problem. How to calculate, sir? First calculate the capital of old partners after making all the adjustments, and total capital, combined capital. I will say no problem. So see this example, you can get to know. A and B are the sharing profits and losses in the ratio of 3:2. A's capital is 30,000 and B's capital is 15,000. They admitted C as agreed to give how much? 1/5 share of the profits to him. How much the C should bring towards the capital? How much should bring means what? Nothing but first think these capitals are after making all the adjustments. What are all the adjustments? Interest on capital, interest on drawings, revaluation profit. After all the giving, this profit is combine this both the capitals. So this is the most important. So 30,000 plus 15,000, that is equal to how much ma? 45,000 is the combined capital. Okay na? For how much share ma? For a 3:2. Okay sir, 1/5 share na? First we have to identify the new profit sharing ratio ma. So only they are giving 1/5 means the remaining share will be distributed by the old partners in a old profit sharing ratio. Yes or no ma? As per a case 1, we have to identify. What is the old ratio ma? 3:2. 3:2. What is the new ratio? New share of C ma? 1/5. So 1 minus 1/5, that is equal to how much ma? 4/5. Yes or no? Directly I am writing. So this 4/5 into 3/5, that is equal to how much ma? 12/25. And 4/5 into 2/5, that is equal to how much ma? 8/25. So how will get the C share ma? 1 by 5 into 5 by 5 in order to get the numerator. So 5 by 25. What is the proportion ma here? 12 is to 8 is to 5. Okay now. So here, what is the total ma? 45,000 is the capital for how much share? 12 is to 8. Nothing but this is a combined capital. Okay na? For this 45,000 is combined capital of these two. What is the combined capital of these two ma? 12 plus 8 how much? 20. 20 by 25. This is equal to 20 by 25. But we need to get what ma? What is the firm's share? What is the firm's total capital? Means easy. So reverse ma. We have to do the reverse. So reverse means 45,000 into 25. Nothing but the same like for 1 how much? So I think did you get the point ma? This 45,000 is equal to how much share ma? 20 plus 8, that is equal to how much? 20 na? So 12 plus 8, that is equal to how much ma? 20 divided by, what is the total? If you add the total is equal to 25 na? For this much. We want to get for 1. How we will get ma? So 45,000 into 1 divided by 20 by 25. Now how much we will get ma here? 45,000 into this 25 will be go up to the 1 ma. So nothing but 1 into 25 divided by 20. Nothing but 25 divided by 20 only na. So how much we are going to get? So 45,000 into 25 divided by 20. This is the 56,250 is the combined capital. But what is the ratio ma? 5 by 25. The ratio is equal to 5 by 25. So 56,250 into 5 by 25. So the answer we are getting is 11,250. Are you getting my point? If you want another 10 minutes, I will explain. First of all, we have find out the combined capital of both the partners. That is equal to how much ma? 45,000. And we have identified the new profit sharing ratio 12 is to 8 is to 5. So this 45,000 is equal to how much share ma? 20 by 25. How did I get the 25 by 20 by 25 ma? By adding these two. 20 by adding the 3, 25. Now we are going to identify total firm's capital. Total firm's capital, how did I get ma? 45,000 into 25 divided by 20. That is equal to how much? 56,250 is the total firm goodwill. But I need to get only whose share capital? I need to get only the C's. So what is the proportion ma? 56,250 into how much ma? Into 5 by 25. That is equal to how much we are getting means 11,250. So like this we need to calculate ma. Like this we need to calculate. If you not understand this point means go once again back and listen. When the new partner's capital is given na, in the case of new partner capital is given, I will take the base as a new capital, new partner's capital, and I will find out total capital of the firm. So I will get to know. So I am going to solve this question. Then only you can get the main object. If you understand this one, we can go to the big sums. Okay, guys. So please be very patient. If only admission completed today na, tomorrow we can complete the retirement, death, dissolution and JLP calculations very easily. Sir, why I am teaching this much slow means, because if you see this 2 days class of 3 hours also, definitely you are going to get 15 marks in the examinations. Okay na guys? Okay. Here, what they have given the total firm goodwill. What is this one? New partner capital is given. In the case of new partner capital is given, how we can find out the capitals of the other persons? So easy ma. A and B are the sharing profits and losses in the ratio of 3:2. The following balances of the capital of A is how much ma? 50,000. B is how much ma? 30,000. The reserve fund is how much ma? 15,000. They admitted C has a partner who has contributed the firm 25,000. What is the share ma? 1/6 share. in the partners, and C is purchased 160 share of partnership form from the existing partner of A and B in the proportion of what ma? 3:2. First we need to find out the new profit sharing ratio, sir. Then only we can do. Okay na guys? Okay. C is going to get this 1/6 share in the proportion of 3:2. That means from A, what is the A actual share ma? 3/5. 3/5 minus, out of this 1/6, 3/5 is going to get from A. What is the B's proportion? 2/5 minus, out of this 1/6, 2/5 is getting from B. What is the A's new share ma? Simple. 3/5 minus 1, 3/6 is 30. 3/30. Here how much ma? 2/5 minus 2/30. Now how much we are going to get here? Here we will get the 30 only, LCM. If you do the LCM, 30. So 30 means what we are going to get ma? 30 divided by 5. That is equal how much ma? 6. So here 1 only na. So 3/5 minus 3/30. How much we are going to get ma? Or if you want, we can do directly this one. 30 into 5. So 150. We can do directly like this also, no problem. 150, 33s are 90, 5 3s are 15. That is equal to how much ma? 90 divided by 15. So 90, that is equal to 75 divided by 150. Here also what is the LCM ma? 150. So 32s are 60 minus 10, that is equal to how much ma? 50 divided by 150. What is the C share ma? C is equal to 1/6. If you want to get the 150 means, so 150 divided by 6 into 25 divided by 25. 25 divided, sorry guys, 25 divided by 25, that is equal to how much ma? So 25 divided by 150. What is the total we are going to get ma? 75 is to 50 is to 25. 75 is to 50 is to 25. That is equal to 3 is to 2 is to 1 is the new profit sharing ratio. Okay na guys, we know the, so what they are asking ma? Find out the closing balance of closing capital of A. For this question we no need to do like that. So directly the closing balance of C will be how much he has giving ma? The C is admitted to contribute how much? 25,000. Here in this situation the same 25,000 is the answer. Here the answer is not a 20,000. Okay na guys. So but if you want to find out the A proportion means we have to do like this. How the A proportion will get means, so for C how much ma? The C capital is 25,000 na. So 25,000 is equal to for how much share ma? 1/6 is equal to for 1/6. For 1 how much we are going to get means, how we will get ma? 25,000 into 1 divided by 1/6. Nothing but 25,000 into 6. Yes or no ma? So 25,000 into 6, that is equal to how much? 1,50,000 is the total capital. This 1,50,000 3/6. So 1,50,000 into 3 divided by 6, that is equal to 75,000. So 75,000 belongs to A, 50,000 belongs to B, and 25,000 belongs to C. So this is the overall proportion. Sir, if they have given the new partner means from the new partner take the base. If they are not giving the new partner means from the old partners we are taking the share. I think you need to understand this both the questions, then only it will be very clear in the big sums, or even though if you are not understand also no problem. Okay na guys, but this thing is picture is clear. So rectify this answer here. The 20,000 is not a correct ma, 25,000 is the answer is correct. So if you want to, they asked about the A share means 75,000, B share means 50,000, C share means 25,000. Are you getting the point ma? So how I have identified means, first of all we need to get the new, then only we can identify. If they given the new partner means say the new, take the new partner as a base. If they are not given means take the old partners as a base. That's all. So now we are going to see the retirement problems. Now we are going to discuss the admission problems first. In today's class we are going to complete the admission. Sir, totally we have discussed about the total basics. Okay na, we know how to find out the new profit sharing ratio, and then we know about the what are the steps ma? Once again, just a second guys. So we have discussed it till now about this all the points. So computation of new profit sharing ratio, revaluation, distribution, adjustments of goodwill, and adjustments of capital contribution. So to know, if you discuss, you have listened means it will be very clear to you. Or otherwise also you can directly attack on the sums also. But why I have not discussed means, because you need to get a 4 marks MCQ plus 5 marks theory question. So for that 9 marks only we have discussed till now. Not only the 9 marks, in order to solve the 14 mark question also we need to have these basics, otherwise we cannot do. Okay sir, I think so many students are waiting for this situation, so directly I am going to discuss the sums. Sir, for admission I am going to discuss one question directly. The solutions also I have drafted. I have shared you the solution file, question file, and that concept file also to you, no problem. If you want to see the questions, you can download the Shikara tutorials. You can go to the Shikara tutorials website and there is a free resources. You can download this material. You can see the questions. Okay na? So firstly, we are going to have the questions related to this one only. Okay. These questions I am not going to discuss once again, sir, because already I have discussed the lot of questions there itself. Okay na? Okay, but I am going to discuss this one. This is a very most important question. You will get to know this question. Okay na? Here XYZ are the partners in the ratio of 3:2:1. Okay, W is admitted for 1/6 share in the future, and Z would retain the original share. Nothing but what is the Z original share ma? 1/6. That means W share is 1/6 and the Z share is also 1/6. So out of 1 we have to reduce both the share, and whatever the remaining share is there now, that share will be distributed to X and Y in the proportion of 3:2. I think you are not understand this picture. I will explain with here this one. Sorry guys. Please wait a second ma. See this one ma. What is the old proportion ma here of XYZ here? The XYZ old proportion is equal to 3:2:1. So here W admitted for how much share ma? 1/6 share. So normally if this sentence was not given, what we will do ma? 1 minus 1/6, that 5/6 share will be distributed by 3 persons in the ratio of 3:2:1. But here what they mention jet would maintain the same ratio of 1/6. For that reason, we should not reduce only 1/6 of W. We need to reduce 1/6 of jet also. So what is the total 1? 2/6. So after reducing 1 minus 2/6, we are going to get how much 4/6. This 4/6 share will be shared by only X and Y in the proportion of what 3:2. So how we will get the calculation? 4/6 into 3/5, that is equal to 12/30. 4/6 into 2/5, that is equal to 8/30. And this 1/6, these are the constants. In order to get the denominator 30, we have multiplied with 5/5. What is the new profit sharing ratio? 12:8:5:5. I think you got the clear picture. This is a somewhat important question. For that reason, I have discussed. Okay, na guys, no problem. And next, we are entering the third question. You can solve. Fourth one also you can solve, no problem. So I am going to explain the fifth one. So see the steps. Whatever I have discussed, those points only will be repeated once again here also. You know how to prepare the P&L Appropriation Account. You know how to prepare the capital accounts. You know how to prepare the Revaluation Account. Yes or no? All the things will be coming to the picture. Sir, I am going to read the question. Please be very concentrate. Understand the question, that's all. Sir, even though if you do the steps without tallying the balance sheet also, you will get the 10 marks. So we are going to concentrate only on for the 10 marks. Once again, there is a disclaimer for you. You have to write this partnership question after writing all the questions, including the MCQs. Okay, na? Or otherwise, if you are writing, you are going to target this question at first now. Don't do the tallying of balance sheet. Without tallying of balance sheet, you go to the further questions. Because if it is not tallied means you will be stopped there itself for that reason. Okay, I am entering now without any late. X and Y are the sharing profits and losses in the ratio of 5:3. They admitted Z as a 1/5 share of profits. He pays 80,000 as a capital but does not contributed anything towards the goodwill. What we need to do now? Say, he did not bring the goodwill. What we need to do? Raise and written off. In order to raise and written off, first we need to find out the new profit sharing ratio. No need to find out the sacrificing ratio. Yes or no, ma? Yes. So first of all, how to find out the new ratio means we have to learn that one. For that reason only we are learning the new profit sharing ratio, how to calculate. That is one of the point completed now. Yes or no? How we will calculate, ma? I am going to show you. Okay, up to now. So what is the question number, ma? Once again, question number 5. I will send this all the files, no problem. So please listen the question. So we are going to find out the new profit sharing ratio. We know the given the old profit sharing ratio is how much? 5:3. Jet admitted from which share? 1/5 share. So what is the remaining share? 4/5. This 4/5 they will going to share in the proportion of 5:3. So 4/5 into 5/8, 4/5 into 3/8. So 20/40, 12/40. In order to get the denominator 40, how will get 5 8s are 40. So 8/8. So 8/4. What is the new portion? 5:3:2. Why we have find out it, ma? We have to pass the two journal entries now. Goodwill account debited to old partners in the old profit sharing ratio and new partners with a new profit sharing ratio to the goodwill. For that reason we have find out it. So sacrificing ratio is not needed, but even though we have find out it. Okay, na? Next here goodwill. What we will pass, ma? We will pass this entry. Goodwill account of how much, ma? 60,000. We have to calculate the goodwill. Okay, na? They will give the calculation process, either simple average, weighted average, super profit method, capitalization method. By following those methods, we will find out the goodwill and we'll give to the old partners in the old profit sharing ratio. And while coming to the return off, how we will do, ma? We'll go to the new partners in the old profit sharing ratio. Here they are taking the current account means they are following the fixed capital method, fluctuating fixed capital method. So all the things we have learned, trust me. Okay, once again I am stopping there. We are valuing the 60,000. So goodwill also they have given value is 60,000. Nothing worry. No need to calculate the goodwill also. The capitals of the partners are fixed. Fixed means what we need to do? We need to open the two accounts. Already we know partners capital account and partners current account. All the adjustments were to be made through the partners current account. Their balances as on the March 31st they have given. Simple nama. So partners are there and current accounts also they have given. So general reserve. So we have to see on the general reserve there is any point means if they are asked to maintain means what we need to do we will pass the two entries. What are the two entries? We will pass general reserve account debited to old partners and they asked to maintain the first time we have written off what we need to do once again we have to raise. For that reason what is the entry? New partner account debited to general reserve account. Sir, all the points we have discussed. Okay na. So next they have given the plant and machinery, inventory, sundry data, stock and trade and bank. So first of all our main first point is, so we have to follow these things So please remember, if you follow these steps the question will be completed very fast. First calculation of ratios completed. Next what we need to do revaluation. Goodwill also completed, yes or no? So okay, for the revaluation what are the things we need to find out? See, plant and machinery valuing at how much 46,000 and 60,000. So what is the plant and machinery value currently? 50,000, but they are going to value at how much 50,000 value of plant and machinery, they valued at 46,000. That means undervalued or overvalued undervalue of how much? Only 4,000. Undervalue of 4,000. What is the entry Undervalue means revaluation account debited to plant and machinery account. What is the stock actual value 90,000, but they are going to value the stock at how much 96,000. Undervalue or overvalue the value has to be increased to by how much? Increased by 6,000. Okay na, the differences between the actual and market value. Okay na guys, what is the entry stock account debited to revaluation? That means this two. Next, one creditor 6,000 is died and nothing to be likely to be paid to on this account. So that person was died, this is a gain to us. The liability has to be decreased, yes or no? What is the entry liability account debited to revaluation? Nothing but creditor account debited to revaluation. Are you getting the point? So like that we have to do. So by using these 2 points, what we need to prepare revaluation account. So we are going to see how we have done the revaluation account. So the 4,000 we have to decrease. What is the entry revaluation account debited to plant and machinery, and the 6,000 we have to be increased. What is the entry stock account debited to revaluation? In the revaluation account, which side we need to post? On the credit side. Sir, I am saying in a simple way, please understand. And next, creditor have to be decreased na. So liability decreases means what we need to do? Debit, yes or no? What is the entry creditor account debited to revaluation account? What we need to do creditor in the revaluation account, by creditor or to creditor by creditor, how much 6,000. The balance will be transferred to the old partners in a old profit sharing ratio. This thing will be transferred to not the partners capital account, current account, yes or no? So next, partners capital account, we are going to write the opening balances here, and the current account also opening balances we are going to write okay na? I am saying a simple process. And then after the whatever the revaluation is there, we are going to record here. Okay. Next, further we are going to continue. And next, goodwill account we have raised and written off now. So those points will be recorded here. And general reserve we are going to raise and written off, I think so. So see, the partner's capital account to be proportionately adjusted on the basis of Z capital and his share of profits through a current account. Share of profits to a current account. That means what here we have to take the base of which one? Z. So he is paying 80,000 as a capital, but he does not contribute anything. Sir, here we have to take the Z capital as a base. So before we have discussed the two methods now. If the capital of the new partner was not given, we have to take the base of old partners, and old partners, based on that we have done. But here what they have given a base of what they are given a base of new partner. What is the amount? Just a second guys. What is the new profit sharing ratio 5:3:2. So what is the amount they have given? 80,000. This 80,000, in this 80,000 belongs to whom? New partner. What is the share? The share is equal to 2 by 10. But we have to find out what total from. How we'll get the total from? Total nothing but simple calculation. 80,000 is equal to 2 by 10. We have to find out for 1. How much we'll get? How we'll get now? 80,000 into 1 divided by 1 by 1 divided by 2 by 10. That is equal to ultimately what we'll get 80,000 into 1 into 10 divided by 2 nothing but 10 by 2. What we are going to get? 80,000 into 10 divided by 2. So 4 lakhs is the total amount. Okay now. This total 4 lakhs will be distributed by 3 partners. So from the 4 lakhs into 5 divided by 10, nothing but half, 2 lakhs. This 2 lakhs we have to be recorded in the current account or what in the current account. So see here, the current account balances like this. So but they have adjusted through like this 2 lakhs, 1 lakh 20 and 80,000. How did we get here? That 4 lakhs into 5 by 10, the 4 lakhs into 3 by 10, 4 lakhs into 2 by 10. So like this we have done. These are the closing balances. The balances we have transferred to where the balances, whatever the additional capital brought by the jet, we have recorded in the 80,000 here. The balances we are going to transfer to the current account. Whatever the balance is there this thing we have to be brought, will be adjusted in the account called as in the bank account. Through the bank account we are going to get the balancing here, will be recorded in the balance sheet. Are you getting the point? In the balance sheet, the under values, whatever the market value they are going to consider, those values only will be recorded. That means stock at a higher value. That means stock at 96,000 and plant and machinery at 46,000. This balance we have got there. Investments the same value. Debtor is also the same value. So general ledger should be there or should not be there General ledger also should be there, and creditors they are going to reduce how much 6,000, and these are the balances we have find out as that. Sir, nothing. If you are not listen the before concept, you can do easy. So this is not a easiest concept. If you directly attack on this means it is a difficult point. For that reason, I have not attacked directly on the questions. I have told you all the questions clearly. So all the basics clearly. For that reason, each and every point, by seeing each and every point, you can understand. Okay na? They have told what partners are decided to maintain the general reserve means what we need to do, rise and written off. If this point was not given, only one entry will be passed. What is that entry? General reserve account debited to old partners in a old profit sharing ratio. That entry we can pass at that point of time. Are you getting the point? So prepare the revaluation account, capital account, current accounts, bank account and balance sheet of the new firm. So these are the things we have done. So once again, if you are not understanding the point means, once again what you need to do you need to go back and listen. Sir, this is how we are going to do what admission related sum. Okay na? And there is another point I am going to explain you. That point you should to be seen. Here calculation in this question, the remaining points are simple I am going to explain about how to calculate the goodwill. Okay na? I am going to read the total question so you can understand, no problem. The balance sheet of a firm on 31st March 2023 was as follows. The profit sharing ratio between the sun and the moon, nothing but what this is a whole profit sharing ratio. So here the partners are called as what sun and the moon. There is a sun loan also, general reserve, sundry creditors, outstanding expenses, property, motor car, furniture, debtor, stock and cash. Okay. The profit sharing ratio of sun and moon is how much 3:2, nothing but what whole profit sharing ratio. They decided to admit the Pluto as a new partner on 1st April 2023. The following terms and conditions was given. Property and motor car to be revalued at 45,000 and 6,500. So property is how much ma here? 35,000. But they are going to consider how much ma? 45. So undervalue or overvalue ma? Overvalue. That means how much they are going to increase in the value? 10,000. So what is the entry amma? Building account debited to revaluation account. And here how much amma? 6,500. But the motor car is valuing how much? 7,500. So that means they are decreasing the value of motor car. What is the entry amma? Revaluation account debited to motor car account. What is the amount of difference? 1,000 rupees is the amount of difference. And respectively, and 5% and 5% of the provisions of debtors. That means debtor value is decreasing na. So if the debtor value decreases, what is the entry amma? Revaluation account debited to PBD account. So with the help of this one, we can easily prepare the revaluation account. Yes or no? So nothing to discuss this point. And next, Pluto should pay the premium of goodwill to the value of 2 years purchase of last 3 average profits, such amount of premium will be credited to the old. That amount of normally will be sacrificed partners in a sacrificing ratio. Yes or no ma? So but here what? They are bringing the goodwill, they are not going to bring the goodwill. He is bringing the goodwill means what is the entry amma? Cash or bank account debited to new partner account, a new partner account debited to sacrificing partners in a sacrificing ratio. Na? But they are going to say what ma? They are going to say treat it as loan account. So that means which entry we need to pass? The entry are cash or bank account debited to new partner account debited to old partner, sacrificing partners, but loans we have to treat, but we should not transfer to the capital account. So I will explain you, no problem. Pluto should pay how much amma? 37,500 as a capital. That means based on this we need to adjust the capitals. Yes or no? So no need to find out the new profit sharing ratio because they have given, but we need to find out the sacrificing ratio because they are bringing the goodwill. They are not going to bring the goodwill. They are going to bring the goodwill. For that reason we need to find out the sacrificing ratio. The last 3 years profits are 5,000, 6,000 and 7,500. Normally this thing we can do easily only, but they are giving the adjustments ma here. Abnormal items, normal items they have given. We need to adjust na those items. See here carefully. So 2021 year and 21-22 and 22-23. This 22-23 is the current year, previous year, previous to previous year. Yes or no ma? So what are the adjustments they are doing? See, bad debts previously written off was recovered how much ma? 400 was recovered the 400 credited to debtors account. Sir, normally we need to transfer these bad debts to whom ma? This bad debts, what is the entry we need to write sir here? Cash or bank account debited to bad debts recovered. But instead of writing the cash or bank account debited to bad debts recovered, they credited to which account ma? Debtor account. That means cash or bank account debited to debtor they have recorded. So that means one income we have recorded, we have not recorded. One income we have not recorded at that point of time. Yes or no? For that reason, our profit has been decreased or increased. Our profit has been decreased. For that reason, what we need to do ma? We need to add back. I will show how to do these adjustments. 1 second guys. See this one. We are taking the base of all the profits 5,000, 6,000 and 7,500. Here, why we need to add back the 400 sir? Because bad debts recorded, bad debts recovered, it is an income we need to record, we don't need to record. We need to record, but we have not recorded. Instead of that one, we are not recording now. Our profit has been decreased. For that reason, what we are going to do ma? We are going to add back. Are you getting the point? And next, closing stock undervalued by how much amma? 1250. Sir, closing stock undervalued sir. Closing stock undervalued. Closing stock will be recorded on which side ma? Credit side. If the credit side undervalued means profit will be decreases. Yes or no ma? Nothing but income decreases, profit decreases. Income increases, profit increases. but expenditure decreases, profit increases, but expenditure increases, profit decreases. Inverse relationship between the expenditure and the profit, and direct relationship for the income and the profit. I think you get the point. Here, the closing stock was undervalued. For that reason, income decreases, profit decreases. We have to add back this year. Okay, na? But this closing stock will become the opening stock for the next year. That means opening stock means expenditure. If the expenditure recorded the less means profit will be more. For that reason, in the next year profit we have to reduce. So what is the effect, ma? Current year profit we have to add. That means 2020-21 we have to add. When coming to the 21-22, what we need to do, ma? We need to reduce. Are you getting the point or not, ma? So the most important calculation, if you understand this one, the question will be easy. So next one, see the second point. Furniture purchased 300 debited to the purchase account. So what is the entry, sir? Furniture account debited to cash or bank we need to record. But instead of debiting the purchase, what they have instead of debiting the furniture, what they are debiting, ma? Purchase. So that means one expenditure we should not record, but we have recorded the expenditure. Because of that profit has decreases. For that reason we have to add back. In which year we have to add back, ma? We have to add back in the 21-22. Okay, na? And next there is, we have to provide 10% reducing balance of we have to provide the depreciation under the reducing balance method. So 10% depreciation we have to provide. That means here on 300, 10% is 30 rupees. But when coming to the next year, what, ma? 300 minus 30 into 10% is 27. I think you are understanding the point or not. And next, and again, up to here not completed. But closing stock was overvalued by how much? 2,000. Overvalued means what we need to do, ma? In the current year we need to do less. In the next year we need to do add. Yes or no? Before that undervalued, because here add, here minus. Now overvalued, that means when income is more, for that reason income profit increases, we have to decrease. Here one expenditure is more, for that reason profit decreases, we have to add back. Are you getting the point or not, ma? Yes. Next one, a purchase invoice of 1,000 was omitted to be booked. Ayo. A purchase invoice is omitted to be booked means on expenditure we have omitted. If the expenditure decreases, profit increases, we have to reduce. And again, the closing stock is overvalued. Closing stock overvalued means current year decrease, next year increase. Current year increase, overvalued. The closing stock was undervalued. Undervalued means what, ma? Current year add, next year minus. So we have to do this one, then only we'll get what, ma? Correct profits. So if you do the average profit, you'll get into the number of years of purchase, we'll get the total goodwill. Sir, this is the simple, this is one way of doing the questions. So please go and refer these questions in the board book. You will get the more clarity. You will get the more clarity. And what are the points, ma? That's all, na? So here revaluation account will be easy. And next, partners capital account, that reserve we need to what, ma? We need to be reduced. Whatever the point is there, na, here these points will be transferred to partners capital account credit side, nothing but profit on revaluation. And cash he has brought 37,500, not only for the purpose of capital, for the purpose of goodwill also. And next, they may identify the sacrificing ratio and they will transfer to that sacrificing ratio. We identified this one and this will be coming to the picture. So now what are the errors we have done? We have to adjust it with the adjusted P&L account, ma. So this is the most important. Furniture we have to be increased, and debtors we have to be debtors we have recorded on which side, ma? Credit side. So we need to what, ma? We need to increase. For that reason furniture account debit, debtor account debited to adjustment account. And next, provision for bad debts, P&L adjustment account debited to provision we have to maintain. Closing stock, whatever the effect we have taken, we have to be given here. So this is the most important point. So another than there is no important points here. So what are the points we need to remember, ma? Property we have to add back, So this effect from the revaluation. So one of the furniture they have not recorded, after the depreciation we need to add back here. So here when coming to the 400, what is the meaning of this 400 ma? So unfortunately bad debts recovered, they have recorded in the credit side, but we have to add back. This 1270 is nothing but provision for bad debts. So cash, they have to bring this cash. Okay na? These are the items related to the admission ma. So until now we have completed the admission. Today's class we totally discussed about the what are all the adjustments related to the admission. Not only the admission, for the retirement also same adjustments. So in the next class we are going to discuss about the retirement, death, dissolution and JLP calculations. So thank you for your participation and thank you for me. So thank you, have a nice day, bye bye. So we can meet in tomorrow's class for remaining all the topics. So thank you guys, thank you, have a nice day.